Hello. I'm not missing MOASS. After 500 individual episodes of doing this, I can say that never once have I missed MOASS. Good morning, everyone. Sorry I was running a little late. I was getting coffee. And then I went pee. But that's enough information. Here's to 250 more. Thank you so much, Steely Dan. We're so close. My wife says it's unacceptable to run late. That's because she doesn't like it when you surprise her, Carl. Now that most of my port is gone, I feel like I'm finally appropriately leveraged for this afternoon. Let's fucking go. Nice, man. Congratulations, I think. So it only took losing all of your money to protect it? Hey, Gurk, do you ever get ads for the scammy fake traders on YouTube? Like the self-proclaimed guru dudes that stand in front of fancy cars? No, I just get the same ad every time. It's like a slightly overweight but buff guy in like a Tommy Bahama shirt telling me that he knows a way to guarantee that I make money on SPX every day. And then he has a hand-drawn chart, like on a whiteboard. It's not me. It's not, I don't own any Tommy Bahama shirts. Also, I'm pretty sure he's in better shape. He's got that, like, I used to play football body, but I stopped and never went back. You guys know what I'm talking about. The kind of guy that's going to die on his 55th birthday. Serious question. Chunky or creamy peanut butter? Depends on the jam. I mean, if I'm using like a preserve and I have big chunks of fruit, I want big chunks of peanut. It's so easy, a 7-year-old can do it. I miss the guy that says if your portfolio isn't greater than $5,000, skip this video. That's because the entry fee to his course is $5,000. That's smart marketing. Peanut butter, bananas, and honey. It's not really my thing, but where's NVIDIA going? Is this a AMD sympathy move? My wife says chunky. Also, we're watching you on your honeymoon. It's like you're here with us. I am. I'm in Suite 2A. I lost way more money on my AMD hedge than I gained on my puts. Weren't your puts for like September or June or some shit? I sold both sides. Okay. Uh, I should have taken that really pulled the trigger on that one there, Thunder. About maybe not trading it in AMD anymore. Maybe that's for the best. Also, Lilliput's sad too. Well, Lilliputs are going to be sad for a little while. Orange marmalade, chunky or creamy? What? Marmalades are always chunky. Oh. Mm, no, not that. I see what you're asking. You know what? I feel like orange marmalade is one of the instances where I might use like a fresh ground peanut butter, where it's creamy, but it's not like Jif creamy. You know what I mean? Slightly grainy. Yeah, exactly. Is NVIDIA negative beta the new MOASS? No. Also, I don't know. The market's not moving on a lot of volume right now. Futures look like they're gonna fail the like standard deviation here on the 5 minute. We'll probably pull down at some point. Yeah, I would say we're probably going to pull down and then stabilize and not do a lot until JPOW gives us the key. Um, Upstart's getting pretty cheap. Tiny gap at 41.36. Is there? There's a tiny gap at 41.55. And 41.12. Until JPOW gives us the D? Is that what you said? That's not what I said. I said the key. It was a sex joke. Well, yours is a sex joke too, but less fun. Dave Ramsey team is talking about recession in Q3, Q4. Not good if you. Who gives a fuck what Dave Ramsey says? Is he bankrupt again? Today's going to be one of those days where data drops, market rips 50 BPS, then dumps 150, huh? Probably. Bobby up 40% on the pink sheets. This was the MOASS all along. NVIDIA getting slamma damma ding donged. Yeah, it actually is. It's kind of cool. Everyone woke up this morning and realized NVIDIA was overvalued a bit. Gordon Ramsay's team is talking about recession this month. Shit. Dave Ramsey is a con. Yeah, I know. That's why I was making fun of him. I'd be a lot better off financially if I would have stuck with Dave's YouTube channel. Probably. Does SPX not see NVIDIA? Can you expand on that idea? The idea of that one that do you think it just watches NVIDIA all day? What about all the NVIDIA analysts? They can't all be wrong, right? No, they are. Is June still enough theta for 370, 360? Those are a bit far out of the money. Well, 360s, you might not be able to get another strike, but I think I have a couple 370s. What else do I have? .380. I have 380s. And I do have 360s. Yeah, I have some 360s. I mean, they're more than 30 DTE. It's quite a bit of time. Any tips are playing today with IV being high? It's expensive. Ooh, look at it go. Hold on. This is doing a thing. Is that sustainable? No. Right? I don't know if I can buy puts on this. Well, there's puts at 41.35 though. Jesus Christ, the gamma's all over the fucking place this morning. Ouch. Options are not cheap. Holy fuck. Everything's expensive today. At the money, 0 DTEs are like $2,000. Jolts didn't beat. Jolts came in lower. Have shares of NVDS because I have been burned way too many times on options there. It also allows me to actually place trailing stops, which surprisingly, TDA doesn't support on options trades. Not a lot of brokers do. Good morning, senpai. With Jolts beating... Okay. Gotta buy leaps to avoid that IV. Yeah. That's ridiculous. What's up, Rusty? IV 35% on IBKR. Sell spreads? Yeah, that seems to be the right decision here. Two DTEs are almost the same price as fucking 1 0 DTEs. I mean, I could get a May 8th contract for fucking not even double the price. Minutes are released at 2. Well, the decision is released at 2, and then the press conference is at 2:30. Minutes are released next month. We've had FOMC days with add the money SPX contracts for 4K. I'm surprised it's not more today, honestly. I mean, they'll go up as we approach the meeting. Jesus fucking Christ. Lee went up $40 overnight? That's fun. It's the 400 put cost. I broke Gamma Max. SPX GN and Fast GN today. Gamma neutral is like 41.79, and I believe the Gamma flip is at 41.2250. Ending. Morning, everyone. Like the stream. Morning, ending. What are some good ways to short the upcoming credit crunch crisis? You could just short the market. When do we get Jerome? Fuck your calls. We're fixing the economy, Powell. Hopefully later today. Spread on Lily June 16 380s is insane. Yeah, I mean the spread on all Lily contracts is insane. I've had open bids on 5 different strikes for 4 days now. And even with the price rocketing, I've gotten a single fucking fill. I think I have a total of 7 contracts that I've been able to purchase. It's usually a little more liquid than this. I've shorted it before. Is the market going to be happy with an expected 0.25 rate increase? I don't think so. It makes the bank solvency issues worse, right? And they're already bad. They're already very bad. Any rate increase at this point is not. It's not going to help the liquidity situation. I've been dealing with tragic events. I'm sorry to hear that, Rasma. I haven't been looking at the market. Any thoughts on GME? I got CCs out expiring 512. Should I pull them back? I'm up 45%. I don't I don't know what strike you have. And if you're in the money, it's up to you, but I don't think GME is going anywhere anytime soon. Massive head and shoulder forming on the SPY 4 hour on the daily? There's one on the daily. Did you see an open letter from Congress saying, please no more hikes, Daddy JPOW? They did that last time too. 501 streams. I'm not always able to tune in during the day, but when I do, I ignore my day job a little and listen to every word. Thanks for streaming. Thanks, my good bean. I hope I can ruin your productivity today. I took 20% profit shorting NVIDIA today. Awesome, Sads. If Powell talks of holding rates as is, would markets rocket initially? No more hikes before sinking? Higher for longer after a week or month? That's possible, yeah. If there's a pause, if he pauses rates, is that what you're asking? Holding and pausing are different, right? If he changes the forward guidance and increases the potential terminal rate, that's going to be bearish. Even if he says we're going to hold here for now and see what happens, because everyone knows what happens, right? Inflation goes up. If he pauses and doesn't increase the terminal rate and says we're just going to hold here, this is sufficient, that'll be bullish in the short term. Good morning. What's up, Grandpa John? Any truth Icon in trouble? Will he be covering his shorts? Ponzi? I highly doubt Icon's in trouble. He's got plenty of money. That short report is not all that conclusive. But, there've always been questions surrounding his fund and uh its valuations, right? It's kind of like a black box, so it's really I'm not surprised they picked it as a short target, but I'm sure Icon will be fine. Or he'll fucking destroy them for shorting him. He's kind of a vengeful dude. Hey Greg, I've been eyeing upstart CSPs for a bit, trying to figure out best time frame. I think it's a good time to sell $12 CSPs for, say, a month out. Or do you see more downside being likely? I mean, we could definitely see more downside. Oh, I don't know. Express gets pretty volatile sometimes. That's weird, but maybe it was just a bug. Yeah, I might do a poll later. Do we have an upside target, or is this push just to get puts cheaper? I mean, I don't think anything's getting cheaper, at least on the daily. This push dragged us up to the kind of like big piles of calls at 4130. Remember the we were talking yesterday about how there's about like $287 billion worth of downside risk if the SPX falls below 4130, probably for like a day. Like if it stays below 4130 for an entire day, it's really bad for them. This is why this is the level we expected um, last week. I really don't understand how the Fed could possibly think that they've done enough to tackle inflation. I mean, I don't think that the Fed feels that they have. Why didn't you warn me that the Upstart shares I bought yesterday were going to keep dropping? I did. I said that like a bunch of times. I really don't understand how they, the Fed, possibly think that they've done enough. When's Powell talking? 2:30. Press conference is always at the same time. I'll have it up. Man, I'd pay to watch Icahn destroy Hindenburg. That'd be funny as hell. I see that someone used my stream card, but I didn't receive my gherkin payment. Upstart made a new all-time low. Have a good one, Pickle. 1 million wall up on gold at 1995. Okay. Bullish? With 25 BPS hike today, where do you see a floor for Upstart? 8, 10? I mean, I definitely think it could fall to 10, but more important for Upstart is going to be the Fed's guidance today. You know, if we're gonna experience another 2 quarters of like illiquidity in the credit market, and we're gonna head for a credit crunch, that's obviously not good for Upstart for several quarters, right? At that point, yeah, we could head much lower, maybe to book. So like the $7 range drags us up to the calls so they can buy the straddle pits. Drag us up. Ah, yes. If JPAD doesn't come to the party with big guns today, we refer to him as J Pew Pew going forth. Do I have a second? No. More rate hikes after this one, and we get to the point where failure to meet debt payments spikes. Yes. Defaults. Is that risk basically hedging requirements or something else? I mean, it's liquidity risk. The par value of their securities goes down, right? And it's not like people are throwing a bunch of money into their savings or anything right now. Uh, like U.S. savings are at like an all-time low, right? So liquidity is getting drained out of the banking system from every direction. It's very bad for them. But yeah, it's not just hedging requirements. The haircut yesterday is gonna fuck with hedging requirements. If you buy shorter dated calls to hedge longer dated puts, How best to exit the hedge after a binary event? Well, you close the part that's losing. Can you write on the screen when the hedge, when the when when the press conference is? You're gonna get asked every 3 minutes. Um, can't people Google it? I completely fucked up my port last week. I lost 3G, added 5G to my account, and was almost able to completely recover this week. 2G more needed to break even. Your take profit and manage risk grant is golden. Thanks, Batty. Congratulations, by the way. Remember when MTV used to have those good claymation celebrity death matches? Eichen versus Hindenburg would be good. J-Pow versus Yellen would be hilarious. That would be pretty funny. If Upstart's appeal is lower default risk, so you think it's possible that there could be some flight to safety for lenders who need to keep lending but don't want to get burned? Maybe bullish. I mean, if they're experiencing a lot of defaults on their current risk model, then yes, they may seek out other risk models. But I think Upstart has to prove itself quite a lot. Um, the people who run that risk management are uh, they're unlikely to switch to something with that doesn't have like the track record that like FICO or like Equifax has, right? Like they're those guys have decades of proven reliability. So, but yeah, it could draw business. It's not likely to, but it could. Ignoring all your previous advice, I got a 411p 0 DTE lottery ticket on that first spike. Maybe I can restore some of my lost port. Thanks for all you do, Gurk. Insert something witty. Thank you so much, Alan. I appreciate it. I hope so. This looks like it's gonna fall back down after that weird spike, so I hope you get there. I got CSPs too early on Upstart, so I'm sure trading at book value is just around the corner. I mean, it's a possibility that has to be considered. You can always roll them down, Gen. I've never tried an FOMC straddle. If I open a SPY straddle, how much theta DTE is optimal? Um, you if it's just for the meeting, I mean, you don't need a lot of theta. Like if you're just gonna play it intraday, you don't need that much theta. If you're gonna try to play like the full range of expectations from the Fed meeting over the next few days, then yeah, you would probably need more. But just for the meeting, I mean, zero's fine. You're overpaying for IV a little bit, but the IV won't crush that fast. I feel like there might be a very good oil opportunity coming up after data is out. We have dropped quite significantly. Puts on SCO, for example. Maybe. I mean, I'm long oil. You think oil's gonna go down significantly? Give me 1 second. All right. Okay, VIX. Yeah, VIX is doing some stuff. Did I get my fill on my Lily put? No. Is there a fucking option on this chain that has any OI? Oh, that's not bad. Hold on 1 second. Sorry. Okay. VIX is starting to move up again. I didn't realize IEP had taken such a beating. Yeah, it went down pretty hard yesterday, like 20%. Upstart market cap is under $1 billion as negative PE value. Yep. Remember when MTV had Headbangers Ball followed by 120 minutes on Saturday nights? Good times? No, I don't. SCO is inverse oil ETS, so my puts would be bullish oil. What an yeah, but like, why short an inverse ETF? Like, the returns aren't going to be very good. FFs people wait on a rate decision before making decisions on Upstart. That's too hard, Mr. Flags. How dare you get in the way of their FOMO? What if they miss out by 15 cents? I'm gonna have to make fake lose internet for my meetings this afternoon to play the Fed meeting. Ah, nice. What Lily option did you choose? I bought 3 puts shortly after open. Curious if I chose one you did. I have open orders at 400 and 390 and 380 and 370. Oh, and 410. So far I've successfully bought 370. The rest haven't filled. I didn't know so many people owned Upstart in here. Yeah, I think a decent number of people do. It's a good stock. The IV's nice on it. It's been really good for CCs this year. You watching KRE? I mean, that I've seen it. I'm watching it for what? If I was gonna watch bank values, I would just use like the bank index or the S&P 500 like banking index. Whose ticker I can't remember right now. SP something. SPF, something like that. What was the date for minutes of the emergency Fed meeting when the banks failed initially? March, was it March 15th or something like that? No, sorry. Wednesday, March 22nd. The banks failed the week of the 15th. The Fed meeting was the following week. If you claim us as a cult, you can avoid more taxes. That's true. I had to buy shares yesterday because I bought zero, but only bought like 10% of the planned position. Okay. 10% too much before the Fed meeting? No, that's not so bad. As long as you didn't like fucking YOLO into it. How did your FSLR position turn out for you? Did you close everything? I haven't closed everything on it yet, but it's turned out very well so far. I still have September and January puts on it, so I expect FSLR will fall more into the latter half of this year. But yeah, the big drop from earnings was right in line with my expectations for them, so I was really happy with that. What's to say Powell doesn't come out with point 0.5 with the intent to pause, then tells the press that they're going to turn the printer back on to save the banks? I mean, first of all, he wouldn't be announcing turning the printer back on at the FOMC press conference, walk-in. That's, that wouldn't be proper decorum. Um, but point 0.5 is possible with a pause. That's super fucking bearish. The market will probably crash. There'll be 5 failed banks before the end of the week if he goes 0.5. My boomer dad is asking me what he should invest in. I kind of don't want him to invest in anything until the market tanks. Smart to tell him to hold cash, or is there a better option? I mean, cash is always a good option. Um, and advising family members on investments is always a terrible idea. But there are points of safety, right? There's energy, uh, oil, nat gas, solar. There can be some safety found in that sector. There's defense, there's manufacturing and industrials, some of which are cheap, but I mean, you have to do a lot of research. You have to make sure that their cash flows are sufficient and that they're impervious to a drawn out recession. But I mean, there's always opportunities, and generally, in during situations like this, there are even more opportunities. They're just harder to identify. Nice one, Mr. Flags. He's used feces in the word facetious. Well done. So 0.25 and all relies on guidance. Yeah, I think so. I just got this alert on my phone. Now it's time to take advantage of your 30-day free trial with solo fid folios and create your basket of stock and ETFs with as little as $1. How the fuck do you create a basket of stocks with $1? Just fractional share. You make your own ETF. I mean, that's kind of cool. I'm gonna do that now. I have a bunch of extra cash in my Fidelity account. I'm gonna make my own personal market crash ETF. I advised my girlfriend with investing, and I haven't gotten laid in months. Does anyone like Nerd Wallet? Ugh. Checking out and checking in from work. Ready to get nothing done today? What are your thoughts on this morning's data? I don't really look at it. We had some data today, right? We had what do we have? We had services PMI, which was slightly up. Employment slightly down. Services prices slightly up. That's not good. New orders are up. And business activity is down. Kind of all over the place on the ISM services PMI. 30-year mortgage rate was down a little bit. Mortgage applications are down pretty significantly. Refinances are up. MBA purchasing is down. Jesus fucking Christ. ADP employment change is way up. People out there really getting jobs. Vehicle sales are up. None of those are good for inflation. The crude stuff's really, well, stock change, I guess, is a little bit important. That's coming up at 10:30. Yeah, not too much to garner from the ISM services PMI. Global composite PMI is up, and global services PMI is up. That's not great news. The ADP employment change is really bearish. That's a huge shift. That almost fucking doubled over the previous month. I wonder if they're going to be considering that at today's meeting. Man, that's a lot. That's a big jump. I have 100 fractional shares worth $1. Cobra 100 index. Doesn't solo Fidfolio cost $5 a month? Didn't that man just lose his whole $1 account off of a free trial? I have no idea. Besides claiming internet outage, what's the best way to get out of business meetings for FOMC from 2 to 4? Can you throw up on camera in a meeting? You could throw up on yourself. That'll be believable. No one will question it. Little embarrassing, but you'll get over it. There's not another backstop for banks. Also, again, they're not going to announce another backstop for banks at the fucking FOMC press conference. They're not going to backstop them again. They're barely doing anything to prevent them from failing as it is. If they'd wanted to stop the banks from failing, they could have just stopped it, and they did not. They could have taken on their hold to maturity risk, given them par value at the discount rate, and let them go out and buy new securities. But they didn't do that, right? They just let them fucking die. Can you please give some insight, comment maybe on specific chapters and books you recommend? I'd rather not. We're talking about risk allocation on a 700K portfolio. I mean, on a $700,000 portfolio, I mean, you don't need to, it doesn't need to be that complicated, right? You know, like 50, 60% in like long-term securities, like bonds or treasuries, right? And then you got what, like 30% in, you know, some split between growth and value, and then 10% like high risk. That's the trading goodies. I mean, you don't need to overcomplicate portfolio allocation like that. I think way too many people spend way too much time trying to fuck with their portfolio allocation figures. It's usually a waste of time. Generally, it depends on your age. If you're younger, you want to invest more in growth. If you're older, you want value, safety. But then they would need this Fed coin before 2025. Just tell them it's a really nice day out and you and the boys want to go fishing. A mixture of oatmeal and water with fruit of choice makes a nice throw up substitute. Mm. Yeah, I mean, you don't have to actually throw up. You could just put a bunch of chewed food in your mouth and be like, oh, and then, be like, ah, shit. Who invests in bonds? I do. Do you know if FRC had access to the new Fed BTFP loan facility? If they did, would they still have died? They did have access to it, and yes, they still died. 50K port is 90% high risk, correct? No. If they decide to increase the terminal rate, would that decision be in the 2 p.m. report? Yes. Maybe. Generally speaking, yes. With that amount of capital, wouldn't a dividend-based investment be best? No, dividends suck. Seriously, they're fucking garbage. Don't listen to those morons over on our dividend. Those people are idiots. They sit around fucking jerking each other off while they DCA into 6% growth a year. It's terrible. I'm pretty sure SCHD's yields don't even match treasuries. I've been straddling SPY profitably the past few weeks. I think I'm going to sit out the meeting and I want to see where it settles before entering another straddle IV die down. Okay. Yeah, I mean, options are very expensive today. What's your overall sentiment of the Fed meeting today? Bullish, bearish, piggish? I don't think it's going to be good. I think JPOW needs to address stagflation today, before, I mean, at least in a moderate way before it takes hold. If they don't, he may not have enough time between now and the next meeting. Why are dividends trash? I mean, are you kidding? Like 2% yields a year? Yeah, well, maybe for you, Half Square. You probably shouldn't manage your own money, though, realistically. Did we almost just get NVIDIA on the screen? I'm going to put NVIDIA on the screen now. I started building my portfolio, wheeling on one account, gambling on the other. Would buying chunks of blue chips and later wheel them a good strategy? No. Unless there's a market crash, in which case, yes. Otherwise, the idea of wheeling is that you don't get assigned. You're skipping the good part of wheeling and going right to the risky part, which is actually owning the underlying. What do you do when you retire if not dividends? I have a trust with a portfolio full of dividend stocks. Should I change the port? I mean, if you don't know how to manage it, probably not. I mean, I make like 3 to 4% a week on my like long-term holds, just selling covered calls. A week. That's yielding per week. Fucking dividends like 3% a year. Dividends are terrible. Also, companies that are issuing dividends generally aren't funding a lot of growth, right? Especially if they have good dividends. Which means the company's stagnating. So you're not gonna get any growth value, or not a lot of growth value over time. I just told my cousin who's selling his house in Fort Lauderdale to park the 400K profit in a treasury for 2 years and use that to offset rent while the housing market corrects. His mind was blown. Smart. What's the 2 year right now? 2 years a little bit below 4%. I'm wait and see if it goes above. Above 4% was obviously better. More chop? This looks like more chop. Definitely stable here. We got what? Well, we still got a little while. What do you want to talk about, Smooth Ape? Yeah, Jimmy still has some FTDs today. They're pretty low though. Where the fuck is it? Today there are 480,000 ETF FTDs. So not a ton, but a little more positive market pressure this morning, and you can see how it reacts. It looks like people are buying lots and lots of long dated calls or puts. VIX is going up pretty steadily from its low yesterday. My dividend port is running at 8.9%. It depends on the composition. It does. Still mediocre, right? I mean, compared to higher risk positions, it depends. Like I said, it depends on your age. And if your dividend port is running at 8.9%, you've got some risky stocks in there. I probably misheard you or didn't understand because I'm a dope. But didn't you already say stagflation is here to stay? I did not. I said we're approaching. The GDP report signaled signs of stagflation, right? We don't have the pullback in unemployment yet that would lock it in, but that's coming, right? And when it happens, it'll probably be rapid. I just told my boomer ex to check out our dividends after listening to him tell me about SCHD at great length. I'm laughing so hard at your description of it now. I mean, I don't know. I've never understood that subreddit. Most of it's full of like 20, 30 somethings who are like chucking all their money into like low growth, low dividend funds. I mean, I own SEHD, but I don't own a lot of it. The covered calls on it help offset, but if you're not selling covered calls on it, I'd never want to own it. If you can get them really cheap, they can be advantageous. Like if you buy them during a market crash, then they're awesome. But outside of that, meh. Let a professional manager trust. Yeah, it's probably the best idea. During COVID, I found one that was 120% divvy, but you had to wait for the fund to get back to a certain value before it paid. All right. What's their plan with VIX? Seems like they're going to shart a little with so much volatility. Maybe. I don't know. I think our consolidation's going to find a level at some point here. Just went just full port into Gen 2410 CSPs or 36% return. Interest rates stable by then anyway. Upstart. I mean, you hope interest rates are stable by then. There's probably going to be another surge in inflation as the bullwhip plays out, right? So even if the Fed at some point gets to claw back rates a little bit, they'll probably raise them again like one more time after that. If Lilly releases a weight gain drug, will the stock go down like the opposite of pre-market today? We'll see what happens. Usually Lilly has some like crazy peaks before it falls in the gamma max range. I noted, I think in the like DD on it that it sometimes crosses gamma max a few times before it fails, but when it fails, yeah, it can drop really really fast. The last time I shorted its like breakout from gamma max, it went from like what was it, like 375 down to like 317 in like a month. My sister finally decided to sell her overvalued house in LA County. She has about half a million in equity. Clown housing market. That's ridiculous. Although LA's real estate may never stabilize fully. Can't you also sell CCs on dividend stocks? Yes, you can, but usually the yields are really bad. I feel like there aren't many stocks could buy during a crash that would be bad. Oh, there are. Some don't survive the crash. I'm not sure if you can use WeBull in the UK. IBKR is probably better if you're in Europe. So overall speaking, what do you think owning a large position of GME for younger people in terms of growth? Do you think in the 10-year period it can realize great multiple growth value? I mean, that's why you owned half a port of it, right? I still own it. Yeah, I think it's got decent growth potential. If I think at any point that that growth potential is in danger, I will reallocate that money in a heartbeat, though. But yeah, I mean, I could see GME stock hitting better multiples and opening up e-commerce. They have a decent advantage across, or at least against their biggest sector competitors over the next couple of years. And if they take advantage of that, they could experience quite a lot of growth. You know, Amazon and Walmart, Target, Best Buy, yeah, Walmart and Target will probably continue to do well, but they're not focused on the gaming sector at all. Uh, Best Buy, you know, they have debt that they're gonna be trying to, you know, contract their margins and lower capex going into a recession. Right, they're gonna be closing stores, um, and protecting shareholder value. Right, Jimmy doesn't have to do that. They could take advantage of that. We'll see if they do. I mean, it's a big if. Hmm. Check GMs. What do you got, turd? Beautiful. Zom has a good divvy and better yields than GME. Well, for now, while oil prices are high or higher. Oil shitting the bed today. Back under 70 a barrel. Do you have an updated Amazon price target? You would buy more with their recent earnings. I mean, I'm pretty willing to buy Amazon around like 80 bucks. If it fell lower, I mean, I would DCA Amazon under 80, between like 80 and like, I don't know, 60, 69, 70. One more question on Lily. Would this 4 to 5% move cause a T plus 2 bounce? Doesn't seem like enough to affect anything. There wasn't a lot of options in the upside range, so I don't think so. Most of the pump occurred in after hours. Um, the last time this happened on Lily, it was before it started to go down. It had like a weird after hours spike, like a lot of buying overnight, and then everyone started dumping bags over the next like couple weeks after that. We're probably a bit early to the Lily play, but it's so hard to get options that you kind of need to be. 100 billion market cap by 2026. GME, not in a million years. Can you give us tips on how to screen for strong options chain companies? No. Well, to be hamstrung by weak options. I mean, you got to get a screener for options chains. find one, I guess. I mean, I don't really need to do that because I'm not looking for, you know, your problem is one of your biggest problems is probably your use of your Zimajewski score in your analysis. You're looking for like ultra stable companies to buy options on, and those options chains are not generally going to be very liquid. If you're looking at like, you know, like energy and utilities and stuff like that, telecom, you're not going to get very strong options chains. Upstart and Jimmy negative beta. I mean, Upstart's not doing that great today, but sure. Weird to see them cover GME FTDs into a falling market. We never see this. That's usually when they do cover them. Also, the market's not falling. It's got high volume upside, low volume downside. What's on the writer's strike? Is it going to actually affect anything that matters to us? I bought some 4,000 weeklies, already up 64%. I got to take profits, right? I mean, the bump in VIX is nice today. My buddy dumped his home equity into Tesla when it was like 1,200 a share. I tried to explain Sony and the 89 crash and RCA and the Great Depression. He called me a lib who hated Elon. Why do you hate Elon so much, man? I sold near the money May 19s. Okay. This is JPA and his buddies buying puts, ready to slam a 75 BPS hike. They're not going to do that. I'm sitting out of 0 DTs until 2 p.m. They're too expensive. Yes, they are. YouTube Vanced not working anymore. Ha. What if Jimmy 1 million X's all the soft goods? Yeah, Lily spreads are really wild. Use an options calculator. The spreads for Lily options have narrowed quite a bit in the last hour. Dump soon? I mean, it's already been dumping since pre-market, right? And it's down 5% from its pre-market high. But yeah, the spreads are getting tighter. Didn't we use a scanner for a long time? I used a scanner like 4 times. I was building one with a friend of mine, and then his like crypto fund started blowing up, so he had to go and do other shit, and I haven't talked to him much since. Where are my 30-minute, 300% 0 DTE gains, Gherk? This is bullshit. Gotta wait till after the Fed meeting for the fun stuff. Are you still able to stream during the writer's strike? I am, yeah. I write all my own material. Strong options chain equals a lot of liquidity in the strikes, ideally. Thoughts on CVS? Revenue and EPS up from last quarter, yet stock down 20% since then. Revenues and EPS are up on like negative growth though, right? So of course it's, I mean, outside of tech, right? Outside of the 5 big tech companies, the investors and other shit aren't fucking throwing their money into declining growth and revenue year over year, right? Beating analysts' estimates means nothing. Everyone conflates an analyst beat with the company doing well, and that's not accurate. Analyst estimates are rock bottom right now. They're actually, it's hard to miss. Are you not adjusting GME's chart because you know it's going to drop back down? No, I just wasn't paying attention to it. The SPX calls I bought yesterday are the same price as when SPX was 41.31. Is Ivy keeping their price up? Yes. Scab. VIX 1 day all-time high. Bullish. Didn't we get Upstart from the scanner? No. Big oil demand, cratering oil prices. I missed this chapter in my economics class. Well, oil demand's not huge right now, but we're moving into a seasonal peak. You ever straddle IW? Also, with oil under $70 a barrel again, there's a decent chance that we see OPEC flex one more time. Sorry. Ah. Okay, sneezing. My brother-in-law's dad bought Rivian the day it IPO'd, hoping it would be the next Tesla. Thankfully, he's a doctor and didn't bet the house on it. I mean, Rivian did okay initially, right? Join late. Sorry if you talked about it already. Is this just FTD covering on GME? Thanks. Looks like it. Yeah, there's some covering going on. Looks like maybe IJH seeing a little bit of covering. Yeah, it looks like IJH. When did you decide to buy Upstart? When the news report of the hedge fund manager saying he doesn't know what it was? No, I bought Upstart when their fail to volume ratio started to regularly exceed like 50%, and it kept getting slapped on reg show. Oil getting shorted as predicted 2 weeks ago. I know. September 380p for Lily. Decent theta to capture a lot of downside from here over the next few months. Could be good. Really, really hard to find strikes that are liquid in September, though. It may take you a while to get a good price on a contract. I mean, it doesn't look like CVS is bouncing off of anything. It looks like it's continuing down. Growth is contracting. Uh, Total equity's down 5%. And cash flows are dropping. A negative 2.64 billion free cash flow in the quarter four earnings. I mean, and none of this looks like I owned CVS like all through 2021 into 2022, and none of this is looking good. The next actual support to the downside's at like 67, and then 60, and then you start to get down to like the $50 range, like near the COVID crash. But there's not a lot of support at its current level at all. And if their free cash flows are drying up, that's not a good sign. How fast does Ivy crush after FOMC? It takes a little while. Usually not until the end of the day. It'll start to crush like, because JPow's speaking the whole time, right? He speaks almost all the way into market close. You ever straddle IWM? No, not usually. Rut sometimes, but not IWM. What's the worst case scenario you see long term for Upstart as a business? Better models are created that are more competitive and gain a stronger foothold with larger banks. That's one risk. I would say that the current bank failures, those are their customers, especially the smaller regional banks, um, could hurt them in the short term. Obviously, we could be in an unstable credit environment for over the next year. Um, Although they are doing a little bit better, they were doing a little bit better in the last quarter with expanding their products. There's a very good chance we hit a period where lending dries up in the event of a credit crunch, and they have a decent amount of capital to survive on, but if it goes on for long enough, they could run out. So I would say those things would be like continued credit market instability is very bad for them. Hey, Girk, as a practice, do you wait to close out a hedge when you close your main position? Or when you confirm the direction of your thesis? Generally, once I've confirmed the direction. I don't just leave it there, right? Because obviously you'd be moving against the position the entire time. Unless it's like unless I'm hedging with like a credit position or something like that. In that case, it benefits from the theta decay. I haven't made enough money yet to buy you the Dyson Bane mask. I hope your allergies can wait a few more weeks. There is nothing in the daily DD. I woke up at like 9:20. Nvidia gamma neutral is at 269.88. The Fed's supposed to be releasing its report today on the SVB failure. Walking. Already up 30% on one leg of my strangle. I should just sell, right? You could reposition it. Doesn't oil typically do poorly in a recession? It can. I mean, commodities can heat up. If you get a hot commodities market, then oil does really well. Like like '09, like '09 through what, like 2012. Excuse my frustration. I thought you were disregarding all the Nvidia questions. No. Can you look at OI or gamma and tell us what positioning looks like? I mean, it's just like a lot of sold calls like it was yesterday. I mean, it's not going to change that much. It doesn't have zero DTEs, right? Yeah, mostly sold calls to the upside. Looks like a lot of sold puts to the downside. It's changing. There's some long puts coming in. Maybe the 519 expiration's getting a little more bearish. Tons of sold calls. 300, 295, 290, 285, 280. So if it moves down below the gamma flip point and starts squeezing out the short puts, it gets really bearish really fast. But it's been the same situation on Nvidia for like the last 3 weeks. Curious about Upstart. Aren't all loan providers using their own form of AI in one way or another? Absolutely not. To find good lending opportunities? No, they mostly use TransUnion and Equifax. Upstart has Upstart's model is better. So uh, they're able to help facilitate loans to people with lower credit scores, uh, with a lower rate of default than the industry standard, which opens up more lending opportunities. But yeah, I mean that sector is not one to advance quickly on the technology side. Excuse my frustration. Thought you were just no selling CCs on Jimmy during this covering. Probably. I have a bunch I need to sell, so we'll see. Maybe I'll sell some before the Fed meeting. Walmart is investing heavily in healthcare centers. Amazon's investing pretty heavily in healthcare too. Are you guys strangled yet for the Fed or still waiting? I mean, I'm already straddled at 41.20. If I get a strangle, it'll be closer to the meeting. So a couple hours. NVIDIA GN 26988 is long put interest or sold call interest building? Both? The put interest is slower to accumulate, but the sold call interest is piling in. Fix looking spicy. I don't regret closing my calls yesterday, but it didn't hit my target price, so no re-entry. Fair enough. Yeah, the IV on 0DTs is really high. Earnings for NVIDIA, I believe, is at the end of this month. May 24th. I don't think gaps matter for swing trades. And if there is a gap, it's nice. It probably lends some like a minor edge, but I don't think the gap matters if there is a gap or isn't a gap. They're just okay with VIX skyrocketing. I mean, they're not stopping it in any substantial way. I mean, I think regardless of the outcome of the Fed meeting today, there's no more liquidity for the bulls. So, at best, what are they gonna go test the they gonna go test the JPM collar again and open up more sweet put entries? They just fucking hamstrung all of their margin for those 0 DTEs, right? Would you rather JPOW do 0.25 hold or have deafened by Pontiff? 0.25 and hold. I was targeting sub 17 for re-entry. Oh. Are you in all of your positioning for FOMC, or are you waiting to enter any still? I might still get like a strangle on something. I don't know if I'm going to get it on SPX, but I'll probably get a strangle on something. Amazon healthcare, same day delivery, bullish. It's an interesting move. 860 watching, 341 likes. What the hell, people? Do better. If you guys could drop a like, that's a big help. How do you know what their liquidity is? Who? Because you can look at the federal funds balance sheets. You can look at the treasury account. You can look at on RRP. You can look at I mean, you can see where the money's going, Bob. I mean, maybe you can't, but there's a reason you'll never get your 4200. I don't want to teach you. You're annoying. My VIX call order was rejected due to margin deficiency on a cash account. Okay. Is it because it's cash settled? It could be, yeah. Thoughts on 0DT Condor on SPX, 4100, 4140. Planning to close before FOMC? Will Ivy keep their value up through the end of the day? Yeah, it could. I mean, generally the IV stays high into close because JPOW starts speaking at like 2. So you don't get like IV crush after the meeting, or not a lot of it at least. Because, you still haven't gotten the guidance, right? And you don't get the guidance until the press conference. And the press conference usually runs till like 3 o'clock, 3:30. If we get some true bearishness out of JPOW, I think VIX may start to spike harder as more people start to leverage longer dated puts. Yeah, that's possible. I mean, that would be cool, but you're still not going to get VIX crush. Even if he does just say 50 BPS and no cuts and drops the mic. He's already said no cuts, and yet they're still priced in. Every analyst is priced, like almost every analyst is pricing in rate cuts by the end of the year, thinking that we're going to have a profitable Q4 to save everything. What are the downsides to selling CCs on SPY? We're in a bear market. You cut me deep. I'm sorry, Bob. It needed to happen. Your persistent bullishness is tiring. Mostly just because you're doing it to aggravate me, which I know. I'm aware of that. Entered 0DT Strangle, a couple dollars out of the money both ways. Up on the position overall due to IV ticking up. In a position like this, is it worth it to play a binary event or avoid crush? I mean, you could just take profits on the IV increase. I usually on strangles going into the Fed meeting, I usually do that anyway. The Fed fund futures is insane. Apparently between August and December, we're gonna have booming growth and recovery. It's like 3 months away. I know. That's because the rates are gonna get cut, right? And then all that sweet, sweet on our P liquidity is going to flow back into equities and everything will be okay again. Except the Fed's still cutting their balance sheet, which they've barely put a dent in. Please show Girk some love and like the video. He gives us so much valuable info for free. The least we can do is like his videos. Thank you, Breton. I appreciate the attempt. Everyone here, though, thinks that the liking the stream is correlated to their portfolio. So if they make money, then they like the stream. If they don't make money, then they don't like it. I don't know why it works that way, but it does. Fuck you, Potato Tom. Haven't you heard the GameStop NFT marketplace is going to save the market? No, it's not. Well, how come on the days when everyone's position prints, we have like 120% likes to views. And then on days where no one's position prints, it's like 30%. I say fuck you to pretty much everyone, Hamburger Helper. I am from New York. If handing out YouTube likes and acquiring Reddit karma were worth anything, you'd be asking me for advice. Bunch of fair weather friends. No, people that think I owe them something. Hey, my Tesla CC's print every day. Don't put me with the others. Yeah, selling CCs on Tesla this last year has been nice. The stream is so entertaining, educational. I could see a financial news network trying to pick you up down the road. Not that you would, because they would try and get you to shill their positions, but only shill what you really want to shill. Huh. Wait, hold on. If I'm shilling their positions, then I can sell calls, right? I know, Potato Tom. I'm just fucking around. Is this where we sell GME on the backside? Wait, what? Oh, the dump on GME? This looks like they're done covering whatever they were going to. Yeah, no news networks picking me up. Can we get a poll, not on the FOMC, but the real question? How many Star Wars jokes tomorrow? Oh, Jesus, I forgot about that. Shout out to Congressman Lois Frankel for selling FRC right before it dumped and buying JPM with those funds. That was just a good move, right? Locked in 100% profits on the 4000p weeklies before launch. How do I tell my job my time is more valuable than anything I could possibly do for them? Um, I mean, I guess you could just say that. Have you ever had a dream that you you had, you could, one of these, the copy pastas. Nice. Happy May the 4th be with you, Eve. Oh, Christ. Are you replacing Tucker? I still don't know who that is. Carl's son? Oh. I didn't know Carl had any children. Think Oprah, but for Fox. Okay. Immediate timeout for Star Wars jokes tomorrow? No. Also, good morning. Also, looking ruggedly handsome as fuck, my man. Thank you, Baradactyl. How are your daughters, Gherk and Gherk? Carl has no offspring. His seed is dead. If you want to squash the Star Wars people tomorrow, make the stream card a Cinco de Cuatro theme, like from Arrested Development. Hmm, interesting. Or or just not acknowledge it at all. Gurk is great, but little Gurk had a little tummy bug the last few days. Thanks for asking. Yeah, no problem, Baradactyl. Gurkella is pretty for a girl's name. That's a terrible name. Is there enough Star Wars? If there are enough Star Wars jokes tomorrow, on behalf of Bithead, I will recall any and all gifted memberships. Nexus, welcome to Zillionaire, man. Hit me up on the Discord. I'll get you added to the country club, dude. May the 3rd be with you. Thanks, Hamburger Helper. Did you sell Junes on Jamie? No. Planning on reposition before May OPEX if it looks spicy. Yes. The Daily DD today was the most informative ever. A true revelation. It said everything that needed to be said. Why does no one ever ask about my offspring? Did you name them Gurk? I hope not. I missed the first part of the stream. What are the GNs on SPX 4179 and 412250? That's okay, well, it'll burn itself out. Hmm. Oh, so Lily's up on some like biogen news about an Alzheimer's drug. Ooh, fun. That'll draw in a bunch of shorts. Since we rarely ask, how are you today? Doing okay. I overslept a little bit, so I'm feeling kind of groggy, but hanging in there. No, but funny story. My baby thinks you look like her daddy. I said, no, that's not daddy. He looks a little like daddy, huh? And she said, me wish me daddy do that. Presumably have his own TV show. I see. There's a Star Wars joke there, but I'm not going to do it because it's going to set everyone off. The drug is called Moonjaro. Are you sure about the short play on Lily? I mean, even more so now. Thanks for letting me know. Girk, was that you flying the drone into the Kremlin last night? No. Dork, abort. I don't know what you're talking about. What puts did you end up getting on Lily this morning? I managed to secure a 400 and three 390s for June. Woo. Girk reading his own message. Please know that I love and value all of my viewers and subscribers, and that every question is equally valid and insightful. I especially like you, the viewer, looking at me right now, and I'm just waiting for your friend request to come through so we can hang out all the time. That's horseshit. That is FUD. Is JFresh on a flight to the TSMC factory with a flag? Maybe. Moonjaro's gonna make them so much money before everyone gets pancreatic cancer. Bullish. We don't have to worry about those lawsuits for decades, right? Thanks, Arugus. I might have to clip that Ko-Fi so I can fall asleep to it every night. I figured it was past time to thank you monetarily. Okay. I was down 14% in Feb trading SPX, up 2% March, up 55% in April, up 60% so far this month. So thanks. Dude, that's fucking awesome. Congratulations, Nexus. That's really cool, dude. I hope you enjoy the country club. It's a weird place. If it's really called Manjaro or whatever, might Manjaro Linux sue? Or not relevant given the different industries? Also, zoom in on the SPX chart a bit. Why? Can you not see it? There. Man, the put side's a little more stacked today. It's almost like the Fed decisions are relevant to the direction of the market. You're successfully ignoring me, you shill. I won't pay you to read my message. I love you. I'll pay you one day. You're just... How are those upstart calls doing, man? That you full ported into? Don't make me bearish. I don't want to over leverage. Okay. How much thinner will Pickle Jar get if FOMC results in 4,300? I mean, just buy calls, right? It's like a $200 move to the upside. It's not like you can't catch that action. Is 380 June Lily puts too ambitious in your opinion? No, they're not. They're not too ambitious. They'll go up. They'll just be hard to sell. Unless they go in the money, they can be pretty difficult to sell. So it might take a few days of chop in order to get out of them. That seems super believable. It sounds just like you. Hmm. Man, keep waiting to enter a SPX straddle to get in cheaper, but the strategy isn't working. They're only going to get more expensive the closer we get to the Fed meeting. We talked about this yesterday when Hazy kept asking me why not buy my straddle today. I even drew a diagram of it. It's not gapping up 200 bucks on one candle. What, Upstart? Why does everyone think Upstart like has some FTDs so it's gonna MOASS? Bro, I love you like a kid loves his abusive stepdad that buys him Star Wars action figures. That's not a weird relationship. Gherk, not everyone has to sell at 1,000% returns. Most of Pickle Jar will sell at the bid and be happy about it. Okay, fair enough. Is it better to buy an FOMC straddle 0, 1, 2, or 3 days before FOMC? I mean, if you buy it too far out, obviously you risk the market moving to a different level, right? Which it did. If you'd entered your FOMC straddle Monday, for instance, you'd have had to have repositioned. Um, so generally, like the day before is kind of advantageous. Like I'm holding my 4120 straddle right now. I'm not gonna close it until the meeting or maybe even after. I went to back to tackle wiking off for OPEX, but it's still too long for my attention span. And I can't wait to sell my calls at 1,000% returns this OPEX. Ah, Jesus Christ. All I remember is the Eiffel Tower talk. Nice. I mean, that was the big takeaway from the day, right? So, Vic's getting crushed again. Yeah. I'm also like a little too zoomed in on it, but market probably drift back up. They're just too much money. Ugh. Where are they selling all the puts now? Mm, Still think 4,000. Yeah, the put and call interest is getting a lot more even. So our range is probably going to be reduced even more. I mean, we've got like a little upside momentum here. I don't think it's going to carry us. Yeah, like maybe 41.25, 41.30. 41.30 seems 41.30 might be a bit too much actually, but 41.25 is possible. I just don't want to buy a $2,000 contract for a maybe test of 41.25, you know? Like if the range was a little bit better, I'd be all about it, but this is shaky. Maybe I just buy in the money. 0.65 delta. QQQ would be a suitable alternative, no? But the fucking the IV there is like 60% on 0 DTEs. It's also ridiculous. I mean, at least it's like close to 30, like 320. So, I mean, but it's not, it's like the move. I think it need too big of a move to get in the money. No, XSP is too illiquid for intraday trading. For us with small reports, better to wait until after the meeting to see direction of the market before SPX put or call, probably. Or buy out of the money 5-6 strikes away, hoping for a big move, or just don't do anything. Um, as we get closer, I might strangle, but not doing anything's not always a bad choice. Also, like the initial volatility that gets experienced, like isn't always indicative of the outcome, right? So you can cut your like when they release the notes at 2, you know, the market's gonna probably do like some crazy shit. And then but like then through JPow's speech it can do more, right? So um like strangles aren't bad for these. They're okay. They're just expensive. So yeah, sometimes it's better just to wait. Not only are strangles expensive, if you mismanage them, you can just lose a lot of money. I've had to move 100 BPS and still lost money by buying 0 DTs in the correct direction before the meeting on FOMC day. Yeah. Sorry, if the theory is correct, which I believe it is, these treasury shorts cannot let the market tank. Well, they can't let it tank hard. No, but they can let it fall. They need it to fall, right? Because they need yields to dive. They have the money to pump it. So what's to say we couldn't see the same thing this afternoon? I'm of the mind sub 4,000 is not a place they want the market to be. Thoughts? I think they don't want to see the market sub 39.50. I don't think 4,000 they care that much about. I mean, they'll defend 4,000, but um sub 39.50 and every bear in existence is going to push for the The fat short leg of the JPM collar, right? So they need to protect that, because if the JPM collar on the downside goes in the money, the market's going to go down hard, like really hard, right? That's like 3750, 3600 becomes possible if we start breaking through that. That I don't think they want, because that would trigger, especially with yields this high, that would trigger too much treasury buying. They do need some treasuries bought though, so hitting that like 4050 to 3950 range is really good, because that helps lower yields. Does it tickle your pickle when you get the What Mean award on your Reddit posts? Never. For 4115p0 DTU, would you wait until closer to the Fed meeting for better prices? Seems like we may chop until then anyway. Yeah, I mean, you could. You could wait for some of the theta to decay. I don't know how much better the prices will be, but they might be a little bit better. Hmm. Are you 1-to-1 puts a call on your straddle? Yeah. I mean, if the Fed comes out hawkish today, we very well could, Eric. Okay, that looks good. That looks pretty good too. So a little bit of call volume here, maybe. Forty-one 50, 65. 4130 is still pretty flat. VIX 1-day options. CBOE wants to make money on volatility after all. I don't think they'll do VIX 1-day contracts anytime soon. Bobby Q sub is a cesspool of cope. Yeah, it's stupid. Straddled for 5-5, thought being whatever the move today is, Apple earnings can move as well. Yeah, Apple earnings can have a big effect today also. If you see 50 BPS at 2 p.m., do you immediately double down on June puts? I already have quite a lot of them. I don't know if I'd double down on them. That'd be very expensive. Thanks, P-Chuckle. Do you think the general consensus is bearish, or are bulls still holding on to hopes and dreams? I mean, I'm sure there's no shortage of bulls, but I think that the positioning in the market is turning bearish, kind of regardless of the Fed meeting today. Apple could maybe turn things around, but mm, I don't. I'm not holding out a lot of hope for Apple's earnings. Jamie D and JPow just posted a selfie together, bullish. That's awesome. You bought a call for SPX in the money, so you don't get theta decay. No, I didn't want to pay for the extrinsic value, so I just wanted the delta exposure. So if this is gonna move up to like 41.25, 41.30 in the next few minutes, I just want to scalp the delta move. Apple earnings tomorrow. Yeah, tomorrow night. That's on JPM no longer being on the same side as whoever shorts T-bills due to acquiring FRC. Or they acquired FRC in order to prevent any contagion risk from spreading over to them. JPOW question from the media. Do recent bank failures worry you? Not really too concerned since I bank with Wells Fargo since they're next to my house. Wells Fargo proceeds to moon. Has the way you trade changed since you started streaming? A bit, yeah. I used to only like really trade in the mornings. And then if I had like some outstanding positions or stuff throughout the day, I'd manage them. But like, I mostly went about the rest. Like after like noon, I would just kind of walk away and go about the rest of my day. So I would say a lot more screen time. That's probably the biggest change. Can you sell CC and CSP at the same time? I have some upstart. I want to average down. Yeah, that's called a short strangle. And this seems like free money. I mean, it's not free money. It's a covered short strangle. No, I mean it's pretty simple. If it goes up, you get assigned on the shares. If it goes down, you get assigned on the puts. I sell short strangles on GME a lot, so it's not that dangerous. As long as your risk is defined and you know what it is. There's no additional risk, right? Your both of your sold positions are collateralized. Can you chart the ascending wedge? Is that an ascending wedge? It's actually a ascending channel. I don't think there's any there's no point of consolidation in it. There might be a little like way out, but it looks like all the lows are pretty equidistant. Like there's a little, like eventually those will touch, right? There's a little angle to it, but not a ton. Short strangles are ideal for stagnation. Yeah, they're one way to profit off of stagnation. They're not always the best way. That depends on the implied volatility and the underlying. Sometimes like using like a condor or something and just selling the theta like is better. Did Lilly release another drug in the last 15 minutes? No. They're just bouncing a little. Probably a little sell side exhaustion. It dropped a lot from its pre-market high. I mean, even at its current price, it's still down like $16 from the pre-market high. You need to not get so emotionally involved in that position this early. Hey, there's my breakout. That's what I was waiting for. Thanks, 1 second, guy. I'm just emotional today because I lost 30% of my port overnight because I overhedged AMD. Lesson learned. Well, I just don't understand why you got rid of the puts right away. Like, you had theta on them. Like, I understand cutting the calls, like cutting the hedge because it moved against you, but then you're supposed to still hold on to the other part of the position. What's going on with Icon? Oh, fucking Hindenburg wrote a short report. How does Cat look? It's not really in a very good range to trade it right now. What are the chances we actually default this time? Only for them to blame even more downside on that, since I think most Americans won't understand. I mean, they probably won't. We're not going to default. $501 likes. Awesome. A Lannister always pays his debts. You mean a congressperson always pays their salary? We aren't going to default. Doomers need to chill. Yeah, I know. This happens every fucking year, though. It's the most infuriating thing. Hindenburg Research is focused on short selling, a little on the nose, right? I mean, that's what they do. And their reports aren't always justifiable. I think you missed my message where I explained why I sold. It was my third roll, and I just wanted out, honestly, and don't like thinking I have to make it back in regards with an individual stock. But, like, I mean, I guess if it's better for your mental health, but, like, the earnings, like, confirm the short thesis, right?
That I feel like that would be the time where you'd like want more short positions. That might just be me though. So is Hindenburg now long GME? No. What are the pros and cons of wheeling the spy? It's you don't make a lot of money. I don't know if there's any pros. Why would you want to wheel spy? Like IV's atrocious. I mean, I guess you get zero DT expirations. That might be the best part of it. But then why not just sell spreads? Like why bother selling CSPs and tying up all that capital? $40,000 assignment risk? Yeah. But Aiken is short GME. I mean, we don't know if he still is. We just know he was. He could have closed it. Maybe he closed it at earnings. While we wait for Fed news, is there anything non-market related coming up that you're excited about? Yeah, Street Fighter 6, my new fight stick arriving in the mail today, and Diablo 4. The Pickles gaming channel is about to get a lot more active in June. I'm gonna buy a PC. Nice. Smash Bros? Ugh, no. Gross. I'm like a massive Street Fighter elitist. If you suggest any other fighting game to me, I'll dislike you. Just I know it's a problem. I'm sure your game's valid and cool, but it's not. Don't worry, I feel the same way about like Magic versus any other trading card game. Although maybe that's not as true anymore. Who are you maining? I don't know yet. Who doesn't use a square gate on their stick? Usually Ryu. I used to main. Well, I didn't like SF5, so I didn't play it a lot. But SF6 looks sick. So I don't know. I'll probably start with Ryu and then find out that they've nerfed him or he's shitty, and then I gotta play someone else. You ever played the original Street Fighter? Yeah. I feel the same way about people who trade unhedged and then blame YouTubers. Do you remember the first time you played Street Fighter? Yes. I learned about charge buffering and now I'm ready to sonic boom you all day. Is that a... You're trying to sexualize that? Yeah, I've played MVC. I don't like it very much. What kind of things did they change between SF4 and 5 that made you not like it? They kind of dumbed it down a lot. They tried to make it more appealing for a broader audience, which is understandable. I mean, since their goal is profit. Um, but yeah, I didn't like where they took it. They got rid of like three frame light attacks. They got rid of the focus attacks, which a lot of people hated, but I loved. Yeah, so I felt like SF5 was just like Street Fighter 4 light, and I really didn't like that about it. SF4 was so much better than 5. Yeah. I never played Mike Tyson's Punch Out with the Power Glove. I didn't have like a TV when I was little. So like Street Fighter was like something I could go like play at an arcade, right? But like SF5 is how I learned that my smart TV had bad latency for inputs. Oh yeah. TVs are the worst. Back when I like played SF4, I got like really serious about it, like an asshole. Um and I used to like go and like haul like 52-inch Sony Trinitrons out of people's garbage and bring them home so it'd have zero input lag. And then you'd go to a tournament, right? And then they'd be using like monitors with 2 milliseconds of input lag, and it would just fuck your entire life up. What's to stop hedge funds from buying Ape and using it to cover AMC FTDs once it converts? Literally nothing. Also, they don't need Ape to cover AMC FTDs. They can just buy AMC. Adam Aaron ensured that there was plenty of it available. How do you have such vast pop culture knowledge? Do I? If you didn't grow up with a TV, I call shenanigans. Hmm. Are you one of those guys with the arcade controllers? Oh, yeah. Big time. I have one right here. You ever played Big Rigs Over the Road Racing? I think at a movie theater one time. Weeb. I'll see you at Evo, Pickle Man. Shut your mouth. We don't talk about that. Otherwise, I need to wear a disguise. Is this gonna keep going up? I guess so. See, this is why the In the Money was good, or like a good choice here for this contract. Because not only is it taking forever to go up, do you stand at your PC like an arcade cabinet? I haven't, but I will. I mean, I have a standing desk. No, I just don't. I don't have a like I don't have a stick. So the only controller I have right now is the leverless one. I ordered a fight stick because they changed the like true neutral for I'm not gonna get into it. I mean, this is gonna get really bad. But yeah, I ordered another fight stick. That's like a standard one. But Ape is far cheaper than AMC. Plus, they don't have to worry about buying pressure on AMC if they're buying Ape. They could just cover all their AMC shorts at once with zero buying pressure. Mm, no. Who's your favorite Mortal Kombat arcade character? I know it's Mataro because of the centaur thing, but I just want to hear you say it. I don't like Mortal Kombat. They apparently nerfed hitboxes big time in competitive SF play. They've banned the ability to press down and up the same time to result in a jump. They have to cancel now. Yeah. I mean, but there's still advantages to it, right? On the defensive side. But yeah, they changed the way, like, they also changed the way true neutral works. So they might be no good anymore. But I already had the hitbox. But I ordered a fight stick like a couple days ago. I think it gets here today. We'll do an unboxing if it shows up during the stream. I used to work at Dave and Buster's, and those Street Fighter nights were intense. We had actual brawls. Walk away with a bunch of phones during that time. Yeah, Street Fighter tournaments are like they're kind of hood. Like you'll get in like a real like fight at a Street Fighter tournament. They're not as nerdy as people think. I think they're trying to make them just as good as normal fight sticks rather than just objectively better. I mean, probably, but I wonder, like, you can't, I don't know if you can take away, like, really specifically, and I've been reading up a bunch on this lately. The throw distance on a standard Stanwas stick is 2 frames from front to back, but it only takes 1 frame to hit the back button, and that, like, for like wake up resets and stuff, that seems like still a really big deal, right? So like the defensive options on like a hitbox still seem better, and since I haven't played in so long, I feel like I might as well learn it. I'm gonna play on PC probably, but I think they're all linked now, right? So it doesn't matter what platform you play on. Yeah, the New York SF scene. Yeah. I worked at one in Orange County. OPD gang units would come in Thursday nights to scope out the place. Management had to step in like, bro, you're making it worse. Are you forming a nerdy Street Fighter guild? No. Are you getting SF6 ending? I live in New York City and grew up by Next Level. You aren't telling a lie. Yes, Street Fighters, like, I think a lot of fighting games are like they're they're like violently competitive. It's not like Magic, where, everyone's just like they're angry at each other but they don't do anything about it. I don't know if I want to spend all the time getting back into it. That's fair. But it's a new game, right? So the entry level's kind of. Speaking of Magic, did you ever hang out at Neutral Ground? Yes, a lot. I was a kid though. The most aggression let out at MTG tournaments or table flips, those barely ever happen. There was that one Grand Prix in Texas where that guy came back and shot the guy who beat him. But, you know, it's Texas. If you had to bet which way JPOW is going to go today, what would you bet? Increased terminal rate 0.25 BPS. Yeah, no one flips tables anymore. You get like a permanent competitive ban if you display emotion when you lose or win now. Thanks, RC's newest bag holder. I really put a lot of effort into it. I'm glad you noticed. 408 puts for today or 410 puts for tomorrow for FOMC meeting. Can you help me think reasonably? I mean, provided it moves down for tomorrow, you'd probably want a little more theta, right? Because you want to get out past the IV bump. Good thing I'm unhedged. You always are, Popcorn Trader. That's what JFresh and I do when we encounter someone we don't like here in Texas. Shoot first, ask questions last. Why even bother with the questions? My stepson got table flipped by a 29-year-old when he was 9. It was insane. Okay, listen. In the 29-year-old's defense, he lost to a 9-year-old, right? The last vestige of his confidence was destroyed, right? I mean, he was already a 29-year-old man playing a children's card game, right? Like his soul was destroyed. You have to feel for him a little bit. What celebration are we going to have for stream number 741? Is that going to be the real MOASS? No, it's going to come and go with no acknowledgement. Are you cutting your call here? I might. Nah, maybe not. No, probably not. Although I don't know if it's ever going to actually make me any money. That was not a defense. No, I've never flipped any tables on anybody. What's an example of an adult's card game? Bridge? Yeah, or like solitaire? Poker? I need dad's advice. I'm about to be offered a job. I like my supervisor and the work, and I'm not sure the risk of moving to a new company where I know no one, nothing is worth it for a 10% increase. What do, Dad? P.S. Love you. Why don't you tell your management that they're trying to poach you and you really don't want to leave, but you need the money, and maybe your management will offer you a raise. I'm not playing a children's card game. I'm learning valuable lessons on adapting and pivoting prescribed by my YouTube finance streamer. Are you a poker player like Hold'em? I feel like you play and are good. Hold'em's easy. I don't I've played it in the past. I don't anymore. I was pretty good at it, but it's not a very hard game. The ultimate Northeast old people game, Euchre? I don't even know what that is. The casino near me has the softest tables. It's really fun to go there. Hmm. Ooh, cucumber sandwiches sounds delicious. Butter? That's the plan, but there are pay restrictions. Government, I'm scared. Hold me. Oh, yeah, and you'd be giving up your ability to do nothing all day by moving to the private sector. I mean, what's the worst that happens? It's not like they're going to fire you, right? Because you tell them the situation. I mean, they might, but that seems excessive. I mean, if they offered you like 2% or something, right? And you're going to stay at the place you like, is that better? I mean, if you really need the 10%. Before the FOMC, I think you said institutions like to get neutral positioning. What does that mean exactly? They straddle and strangle the fuck out of the indexes. Those positions are delta neutral, right? They're positive delta on the call side, negative delta on the put side. I've played Yu-Gi-Oh! I think it's just a shit game. Like, it's not very hard. It's kind of dumb. All the card, like, there's tons of power creep. It's terribly balanced. Feelings on avocado toast. That's just avocado on toast. And it's worse than butter toast, flavor wise. I'm not getting fired. They need me. I do nothing all day but listen to you, but for some reason they consider me this high producer and a super genius. See, you don't want to give that up so readily, right, Jeff? Did you get hooked on beans and toast when living in England? No. You shouldn't microwave anything ever for any reason. Yeah, I mean, so you have a I feel like you have a zero risk play there in asking for a raise. I mean, you might run into caps, but maybe they can, move you into a position where they can pay you more, but you basically do the same thing. And then yeah, if they can do anything for you, you would prefer to stay, right? I feel like if I had an employee and they were in that situation and they were someone that I wanted to keep around, I would do my best to keep them there, right? Are you gonna stop saying stupid bullish things to try to trigger me, Bob? I don't really care if people are bullish. I get it. But at least like back it up with something, right? I mean, I got to do all this research for the bear case, and then the bulls are just like, stocks only go up. Pokemon TCG is actually the best TCG in the world. The problem is no one knows how to play it. Hmm. I feel like a lot of people know how to play it. I mean, it's just based on Magic. Wizards of the Coast used to produce the Pokemon TCG. It was better then. I'm also a temporary director level position, so maybe if I can be made permanent and get some extra dollary dues, then I'll stay. Otherwise, there's a risk of me going to my base position. Oh, yeah, there you go. I'm sure there's an angle that you can approach it from if you think about it. Tell them that, the other job's offering better security than you're getting right now in your temporary position or something. That guy should keep his government job due to the special bonds available to government employees in the retirement program. Ex-Fed here. Ooh, yeah, that's true. There are perks. Also, I mean, are you sure that just because the salary raise is equivalent, are the benefits equivalent? I made a cool MTG stream card forever ago, back when things like RC were cool. But Girk didn't want to reveal his nerdiness back then. And now here we are just talking about it openly. Okay, listen. That's not the reason I didn't use that stream card. I didn't use it because I forgot it existed. JPEG is 50 BPS, says more hikes. Market pumps to 5K because irrational something something. I mean, if JPEG has 50 BPS and the market pumps, it's going to go down really hard as soon as that pump is done. I like it better when there isn't this thing that's going to happen and a binary result. Much easier when you watch futures and say, I think things are going one way or the other. Yeah, those days are better. Can I? Oh, yeah, absolutely. I'd be more than happy to talk to your employer. I have gigabit internet, but ATP is saying I have no or slow connection and only ATP. That's probably an issue on their end then. How greedy is a SPY in the money bear call spread? I mean, a little greedy. It's risk limited. From a business perspective, Yu-Gi-Oh was brilliant because the trading cards were part of the show. Kids who couldn't even read knew how to play with the cards. More incentive to buy more cards. I didn't say it was a bad money-making idea. I just said it was a bad game. Just like me. That's not true, Fluffy. Okay, maybe it's not possible for us to go higher, and I just take the profits on this fucking thing. That was a good fill. Ugh. All that time for 10%. Gross. When IV down. Maybe the market would pump to 42.77.75, then dump. Who knows? Sorry, Odorous Dan. One week less vacation and less sick time, so basically 3 weeks of pay lost if I take time off. Also, if I take this job, I get another 15% raise within 2 years. Less with my current position. What about health insurance? What about did you investigate the financials on the other company? Are they stable? Are they going to be able to survive a recession? Are they going to make cutbacks and claw back those raises in 2 years when, labor demand lightens? Unless it's in the contract, raise in 2 years will likely never happen. Yeah, there's definitely some risk there. He's Canadian. Healthcare is not an issue. Okay. I'm excited for the shift in questions complaining. Why do we keep dropping when bear rally? Because I exited too soon. When will I have a job IRL? How defend home from Midwest marauders? Think I'm selling butterflies on run? Do you think it's already seen its downside from FSLR's earnings? I'd, I'd, well, my only issue here would be a downturn in the market could put your position at risk. Like, what kind of range are you thinking for your spread? If you're doing like 22 to 17, that doesn't seem so bad. Volume's kind of starting to dwindle, so it's union negotiated risk. It's in the contract. Oh, okay. Yeah, I mean, kind of back to where I was at then. It sounds like you've thought it out. I'm not sure you'd have access to financials unless the company was publicly traded. True. But well, if they're government adjacent and they take government contracts, even if they're private, you should be able to get some financial information on them. There are two more solar companies reporting earnings today after close. Oh, that could be risky then. Which ones? I've thought it out, but I want you to tell me what you would do. I mean, that's what I would do. I would go to my current employer and be like, this is what I'm being offered to leave. And right now I'm in a temporary position and I don't have the job security I would have as a full-time director and I don't have the, salary potential. So if you don't want to lose me, we need to work something out. Otherwise I need to take this other offer. It's pretty simple, right? That's not how this works, Bob. You have to offer me something to leave. Yeah. Then they say, "Okay, see you," and you have no job. Well, no, he does. No, I don't sit crisscross applesauce when I play Street Fighter. I'm not a kindergartner. I don't think I have that kind of knee flexibility. I'll let them know that my advisor supports my plans. I don't know if Tesla honors old Solar City contracts. They may have to. What do you do for health insurance? Yeah, I just pay out of pocket. Oh, I just pay out of pocket for insurance. I don't ever use it. It's definitely a scam. Instead of being the employee, be the employer. That's preferable. Do we need to give you a raise to keep you? Huh. I don't know how much money I make from streaming, so no, probably not. Thanks, Glowstick. Thanks for you hanging out every day. If you say you have a better job offer to get a raise and bluff, you'll leave without getting the job offer. He's already got the other job offer. So it's not a bluff. It's it's more of a what are you gonna do to keep me type situation. Yeah, he's also basically got what is a tenured government job. Most of the Elliott Wave, I mean, who cares what Elliott Wave guys think? I'm betting on a house with solar city panels and 9 years left. The house needs a new roof. Solar city contract states $600 for R&R, but generally Tesla quotes people like 6K to do it now. That might be something you need to research. I don't trust Elon to honor anything. Smart. They can't retaliate. He has a government job. Raise Dillionaire to $49.99 and get rid of the Poors channel. But what about the Poors? Everyone's got to start somewhere. Is your 12,000 C your hedge? No. Absolutely not. Yeah, that's for like unskilled labor though. You know, if you're like a cashier and you're like, "Oh, Target's going to pay me $2 more an hour than you guys are. What are you going to give me?" And they tell you to go fuck yourself. That's yeah. But, if you have a specific skill set and your time is valuable to your employer and your expertise, that changes the dynamic. Goddamn pores. JPOW hasn't spoken today, Rhino. But you are very far out of the money. This is very skilled labor where I do nothing, but they think I do everything. See, I wouldn't want to give up a job where I don't have to do anything and I got paid. Add employer demand for employees, and you have quite a bit of leverage. Yeah. If SPX tanks today, as I think it will, is a May 19 expiry on a 4130 call enough time for it to recover? It didn't hit my target today yet. Possibly not. Here's the problem, John. If SPX tanks today, what makes you think it's going to necessarily come back? especially within the next 2 weeks. Same, getting paid for nothing is too valuable. Yeah. You would if you had a wife and she said get paid more. No, I wouldn't. I'd be like, I do nothing at my current job. Fuck you. I don't know how much I'd be able to hang out here all day if I got another job. That scares me. Our relationship would suffer. I mean, yeah, but I'm not going to pay you more to hang out here. So, you got to do what's best for you, right? Well, I'm new to doing math, but looking at IEPA's last 10K, I think its NAV is about 2703 a share. For closed-end funds, look at look to buy at or below NAV or other metrics. I mean, they're not a closed-end fund, which is one of the biggest problems with the Hindenburg short report. Um, but yeah, for closed-end funds, it's ideal to buy them before below NAV if you can get them below NAV. 40-50 puts May 10th, not enough theta. I mean, if we drop hard, there are plenty of theta. I don't even know of engineering jobs where I don't have to do anything. They probably exist. Have you thought about working for SpaceX? Sonic Boom. Thank you so much, Kyle. How fucked is my 410 407 with a cost basis of 386? Is it still possible to turn a profit off the FOMC speech? Or should I have closed at the bottom earlier? I don't know. Were you up earlier? I did nothing in my last job and got paid way more than I should have. I have a new job and I was worried I couldn't hang out here. But here I am with a 25% raise, still here. Nice, Brett. Well done, by the way. Can the Bulls do a 0 DT SPX call by buying? You'd be amazed at how much YOLOing and gambling on 0 DTs incentivizes you to increase your salary. Where do you see the SPY heading prior to rate release? I don't know. We could test like 4130. It's not out of the question. We keep getting rejected off of it though because like the put positions there. Our range seems to be about 4120 to 4130 for the chop. It's tightening too. Paid Dork more so he doesn't need to go on vacations with his family. uh Even with the 0.25 hike, I have around 6 weeks until the next bank failure. Is that too loose? Eyeing some short positions if today is 0.25 and pause hold. Okay. I I mean, we don't know the internal risk for any of the banks, like at least not live, right? So you know, a 0.25 hike could lead to a bank failure by the end of the week. It may be a couple weeks. I mean, we went from what, March 15th, 6 weeks till FRC failed. 5 weeks from the Fed meeting till FRC failed. What's up, bro beans? Grabbed 100x 312 313 QQQ bear put spreads for Monday. What have you got idea to hedge for this beautiful position? Dear God. Um, bull bull call spreads. No, I'll see you later, Jade. It was good knowing you. Showing people successful trade entries and exits with what has to be almost 100% accuracy is more than plenty of payment for you. I mean, it's not 100% accurate. It's pretty good, though. Sup, Girk Berry here. I'm down for a big drop today, just not big of a drop that would trigger a circuit breaker. Okay. So you have spy pets? Brett, Sonic Boom. Thank you so much, Brett. Sonic Boom to you too. Also, Flash Kick. If we tank today because JPOW hawkish, we reach 3,900 within a week. We could reach 3,900 faster than that. That doesn't mean we will, but I mean, trying to say like, oh, we can hit this by X. I mean, it depends on how hawkish it is, right? If it's really bad, like what if he does 0.5 and then increases the terminal rate for another 75 basis points into the end of the year? I'm not saying that that's going to happen. The likelihood of that is really slim, but it could, right? So he could also be fairly moderate given the bank failures and, not do anything to address potential stagflation because they only have the one GDP data point so far, right? And then, we could just, slow trickle down into the larger brunt of the put position around like 40, 50, and then sit there and then bounce or drop more as more data comes in, right? That's so true. I asked for a raise because of my zero DTE problems, and I got it. Can confirm my gambling addiction is fueling my pursuit of a master's and a better job. Nice. How do you feel about 616, 385 puts as my furthest out of the money position? Am I dreaming that I have a hope those could get at least close to in the money? I mean, you could definitely scalp a downside move with them. In the money, 385 by 616. It's possible. I mean, Apple could have bad earnings. Bad earnings and a hawkish Fed. That could do it. AMD wasn't so hot. I was just bluffing. Can I stay on? All right. Overall sentiment is chat is bearish, and that worries my puts. Why? Who cares what sentiment is? I mean, I prefer to cook on gas stoves, but they are bad for you. It's I mean, it's probably not like a big deal. Like just open a door, but yeah, I mean, they're not. Blanca Roar. Thank you, STD slot machine. I have a feeling this CPI will be bad. It very well could be, but it's not out yet, right? This is a little different dynamic. We don't have the leading inflation data going into the Fed meeting this time. I'm sure they have an estimate though with the oil prices being up, but they're down today, right? Conveniently. What if my side of the Eiffel Tower looks more like that one condo in Florida? Should I see a doctor? Maybe. a specialist even. All of their all the option statistics that you get on the broker side are fucking useless. They're mostly just data from their own platform, right? AMD and Nvidia next earnings will be bad. Their last earnings were bad. Gamers are fed up with stupidly high GPU prices. It's okay. They need to bring the prices down because they're sitting on billions of dollars in inventory that's not moving. Yeah, lots of things are bad for you. How are gas stoves bad for you? I mean, you're burning fossil fuels inside your home. Like, natural gas isn't clean burning. Cancer, cancer risk over time. Competing cucumber based YouTube traders offering me $10 an hour to join a stream. What's your best counter offer? I can raise the rate of your Dillionaire membership $20 a month. That's the best I'll do. E Honda bitch slap for the win. Man, there's a lot of people in here that play Street Fighter. This is weird. Is it because of Reddit? I have a huge vent hood over my range. That helps. New York City doesn't have that a lot. Like I have my stove vents outdoors, but most of them don't. Like most apartments, it's just like that little like grease filter. Nope, some of us are just old. Oh, okay. I'd be green on the day, but that Ko-Fi and Super Chat wiped me out. Sonic Boom costing me everything, but admit it's fun. Thank you so much, Brett, for dumping all of your GANs into Sonic Booms. Hmm. Am I greedy if I sell 285 spreads on NVIDIA? I am, right? I shouldn't do that. Although, hmm. 60 cents? I, yeah, it's not as good as it was the other day. Fuck that. Do you see the market making a run on the release of meeting expectations, then dump on terminal increase in speech? Try to decide whether to add puts here or at release. I mean, there's fucking no way to tell. It's completely random. It's just gonna bounce between both sides of the straddle until all the positions are closed, and then it'll pick a direction maybe by the end of the day or tomorrow. Upstart pretty cheap here. Much more room for downside off FOMC. Looks like it's almost a value play. It's getting close. But yeah, there's issues with the forward projections from the Fed meeting. So I entered like some like 1250 sold puts, but not a ton, right? And I'm just sitting on the credit right now. I'm not doing anything with it. If we have a definitive timeline to credit market stabilization, like if they're like, okay, we're gonna pause and like Q1 of 24 or something like that, and then I'd feel more comfortable. But if they're gonna increase the terminal rate, and we're gonna continue to get choppy fucking rate increases from the Fed, then I'll wait on going longer on Upstart. Still have scars on my thumbs from practicing that Hadouken slide on an SNES controller. That would actually cut through your skin. Because there's nothing much better than playing Street Fighter against your friend, getting KO'd in the game, but then throwing a swift kick at your buddy's skull to get the final KO of the series. Nice. What range is this bouncing for the straddle going to occur in? I mean, right now it looks like anywhere between like 41, like 41.45 and 41.20. Although I guess, it could move higher and lower in both directions potentially. Like there's a lot of strangling at like 41.60 and 75, and then also at 40.90 through like 40.70. So there's definitely a lot of range. I'm just straddled at 41.20. I haven't moved it. Do you think this movement here have anything to say? No, it's all irrelevant until JPOW says something. The market might skew to the upside. If they're worried, they want to try to get their calls in the money before the Fed meeting. That could be a bearish sign, but it doesn't necessarily mean anything. Luckily, my rental house is drafty enough. I feel safe cooking with gas. You were way better at macro than I am, but am I wrong for thinking that if the Fed doesn't go hard soon on inflation, then we're fucked long term? No. I think that's a correct assessment. I think the Fed really needs to do something big today. They need to reinstill fear in the market, because the market is not respecting their ability to raise rates much higher than they have. The markets are, treating the bank failures like they are going to handicap the Fed's ability to continue raising rates, right? So, they're viewing the bank failures as a sign of weakness for the Fed, and the Fed needs to correct that narrative. Otherwise, they'll lose their already very tenuous grasp on the equity markets. And that's how you get, like, hyperinflation, right? If the Fed wants to achieve a soft landing, what do they need to temper some exuberance? They need to temper a lot of it. The market it's massively overvalued right now. Yeah, these prices is ridiculous. The market should probably be trading around like 30, at most like 36, 3,700. To at least be moderately in line with earnings. And those are going to get worse, right? Margins are still, they haven't stopped contracting. They've only just begun to contract. I think they're too scared to go big. We'll find out. He's come out, strong before when people thought he wouldn't. So And you know, all the speeches from the Fed presidents over the last several weeks have indicated that they don't care about the bank failures and they will continue to attempt to tackle inflation, right? So we'll see if they stick to their guns. That or the market sees a different reason as to why they will be cutting rates quickly. The only way that happens is if we get a crash. How does the Fed squash the increasing potential for stagflation by forcing a recession? I mean, the recession's already here, right? It's a guarantee at this point. So there's really nothing holding the Fed back. And you have to think about these things from a strategy perspective, right? That's really the only way to analyze them, because ultimately it's the decision of, you know, it's like 12 people. I wonder if the DTC haircut change is an attempt to dissuade further rate increases. No, I think the DTC haircut change is an attempt to limit the amount of tail risk in the market and to offset their own risk from all these zero DTEs. Even if you aren't a bear, hoping for a dovish Fed is hoping for a hyperinflation. You do not want that. Well, a move towards hyperinflation, right? But see, like, the longer the Fed pushes it off, the more extreme their reaction has to be in the future, right? So, you know, if they continue their kind of already very slow rate of rate increases and the risk of hyperinflation presents itself, their reaction will have to be swift, right? And like it's not going to be a soft landing at that point. They were considering to hold rates, yeah, at the last meeting. But a lot's changed since then. Also, they were more dovish at the last meeting, and because they were addressing the most recent bank failures, right? That happened the week before. I don't think they're going to do that twice. I have some Apple 125 CCs expiring May OPEX. Trying to formulate a plan to roll. I think let JPOW talk and Apple earnings tomorrow and roll a bit out to September to get some value for rolling. Those are very far in the money. But yeah, that might be tomorrow might be a good opportunity. Yeah. At least you have the increased IV to roll on. Put Meta on the screen, please. Why? It's down 1%. What are your thoughts on price volume analysis? It depends. It's useful. It has a use. It's helpful in assessing liquidity, but it's not a great way to assess liquidity. New bank failures mean we have to see some dovish takes? No, they don't. J-Bow comes out wearing FRC risk management team swag. Like he's got an FRC duffel bag. I sold them for keeping value for a market downturn. I mean, generally, if you want to do that, you want to sell them very far out. Like 6 months, a year. Like, I mean, kind of the same strategy like I did with AMD. But I sold those calls for January of 24. And then if things continue to look bad through like quarter 3 of this year, I'm going to probably roll them out to like June or July of 24. Are election cycles historically beneficial to Facebook's stock price? They might be. I mean, I guess more advertising revenue, but not really that much more, right? Have you heard the theory that CLOs for commercial real estate are causing heartburn for entities for pricing as collateral since COVID? I've heard a lot of rumors about the commercial lending side of things, but well, especially with commercial real estate, but a lot of them are fairly unverified. I mean, there's definitely problems in the commercial real estate sector, big ones, but those aren't. Well, they're not super apparent just yet. They'll get worse, especially if we hit a recession. No, really, check meta. Why? Someone's selling it? I mean, it's fucking overvalued. This isn't, I mean, is this really that crazy? This happened on almost no volume. And they're issuing bonds as of what, yesterday? Or here? They started issuing bonds on Monday. Remember that time that Meta dropped like 8% in the middle of the day? Back in 2022? 40-year bonds? Yeah. That's how long it's going to take to build out the metaverse. Or what are you going to do? Chase it and then it fucking hangs up on the sold, like the sold put side of this and you fucking bounces and you get fucked? FTC's proposed changes include barring Facebook from making money off data collected on users under 18, including in VR. Oh my god, their whole business model is about to be destroyed. FTC accuses Meta of misleading parents about protecting kids' news. FTC proposes new sanctions for Meta, owner of Facebook. FTC alleges company violated earlier privacy orders. Ooh. Oh, I like this. Oh, this will be good for my Google covered calls too. Is Google getting shit on? A little bit. Oh, look, it bounced on the sold puts. Meta's not that big. They're like 500 billion. Whatever. I took $3 and turned it into 5. Congratulations. As positioning on SPX, it's skewed a little bearish, but that's just because we're so close to like the top range. We're gonna see some crazy VIX later? I mean, maybe. That's like 66% profit. Flat until 2? No, we might pull back into the lower range again. Let me see. Is this gonna push? Hold on. Let's push higher. Interest is so split today, it's really hard to tell. They might, I don't know, they might try to push higher here, but it might just be like we test 41.35 and fail. There's a little momentum on this. And there's a little bit of range for futures. Not a lot though. Futures looks pretty bad actually. All of this looks kind of bearish as fuck. What's the long-term one looking like? That looks worse. That looks pretty bad too. Interesting. Hmm. All right. Do we have to wait for the speech? No. For the hold pause, we might, but not for the rate. IEP is down 18%, and I had two $50 calls for September. I bought yesterday, they didn't lose any value, so I quietly snuck out of them for no loss. I've never seen that before. That's because your IV went up. Anyone knows if you need margin on IBKR to sell SPX options? Yeah. I mean, do you have your strike times 100 in cash? You can sell secured positions on SPX, but like a 4130 contract requires you have $413,000 available. $30 after. Have you guys never been through an FOMC meeting before? Isn't this like our 12th one together? They're both gonna fall off the chain, Bruce. That's what happens. Nope, first time. No, this isn't OPEX. Why isn't a video showing NVIDIA expirations June 21, then jump to July 21, nothing in between? Because there's no weekly contracts open for that time frame yet? Only the monthlies? It's only my wife and her birthday. Yes, we've been through 20, but I still can't remember. The number of questions I'm getting asked today about, like, where's it gonna go, Gurk? I don't fucking know, man. I'm not JPOW. I don't have, like, insider information on the Fed meeting. Buy a put and a call if you don't know what you're fucking doing. Lose money on 2 contracts. Kirk, when you're done making brown, do you raise your right or left cheeks to draft the mess from the southern shower? Also, if one was to turn the butt dunker water pressure on high, does that make them Clay Aiken? I'm still working on doing the Tahitian catamaran with the wife. That's a lot. You've packed a lot into one $3 Ko-Fi there, Kendro. I don't need to raise any cheeks. I have a bidet. And congratulations on the next step in your relationship. You timed him out, Fluffy. JC is the Ko-Fi mod. JC would have approved that. If I hedge my puts by buying more puts, is that proper risk management? No. I'm never worried that people think that's what my hat stands for. As a matter of fact, I hope it is. Kendra said he approved it. He's trying to steal JC's job. Oh, I see. Well, that's not acceptable. Yo, Gork, I bought SPY 405 piece for today, so I should win, right? I mean, probably not. Well, just because you're you. You won yesterday. That was... now we're playing with fire. No, JPOW hasn't done his thing yet. Why can't anybody just, like, look the time up themselves? The market will react one way, then the other way. That's the way it works, right? Usually, yeah. Why am I so tempted to close my hedge now and not after the notes come out? I don't know. Reprimanding someone for helping others do their job is the most millennial shit ever. Fluffy's not a millennial. Or maybe he is. Some of the economic calendars say 10 a.m. PST, but you should check the Fed page. It's always 2 o'clock. Every fucking time. It's 2 o'clock Eastern Daylight Time. That's because the economic calendars aren't accounting for daylight savings, I assume. Kendro isn't Bithead. I've mismanaged strangles on FOMC before, so I'd be very grateful for your input. Nope. Manage it yourself, not my problem. It's volatile. There's nothing I can give you that'll help you. Don't strangle it. That's the answer. If you can't manage them properly, don't do it. The answer isn't, hey, you help me do it. I'm hedging my SPY puts with Tesla puts. All right. You think that's going to work? We play the bear song when it's time to close puts. No. Just because you said that, I'm never going to play the bear song again. Thoughts on GME this week? Have you sold any yet? Yeah. Cover calls are awesome. So I DM'd Carl my password and login info, and he said you're cool with managing it? No. Also, can't wait till 4 p.m. Eastern to hear JPOW. Thanks for everything. Carl definitely just stole all your money, butt liquor. You got Carl'd. Can you take a look at Ferg? Is that real? They seem to be doing quite well after their most recent earnings. Ooh. Those cash flows are nice. Think they'll be able to maintain them when consumer demand drops? How long of a time frame are you looking at? Are you just trying to like play some options on it or what? I drank too much. I think I'll just full port puts unless Tesla goes above 170. Then I'll full port meta calls. Genius. Are SPX 0 DT options super expensive just because of FOMC? Yes. So you want me to just do what I would normally do anyway, Bruce? Just an FYI for everyone, if you want Gherk to help you manage your position, tell him it's your paper account and you're trying to learn. No, that doesn't work either. I'll maintain your cash flow if you're not careful. Long-term hold. I don't know if they're gonna sustain the same. I don't know. I'd have to do way more. I'd have to do way more research. Inclusion in the S&P. No, they have a negative earnings. Not for several quarters at least, right? If their next earnings misses also, then they're out. Unless it's already been announced that they're going to be included. I don't know anything about this company. I mean, I know that they're a wholesale distributor. Your patience is waiting today when barraged by the same questions asked so many different ways. Yeah, it gets thin. Hopefully, JPal will start talking soon, and then I can ignore everyone and listen to his glorious voice. I had 81 235 put on Meta that I sold yesterday. Nice, congratulations. You missed the dump. Wait, not congratulations. Lame. You sold. Okay. Wait, didn't it drop yesterday though, or was that Monday? Hold on. I don't. I know one of the days this week, Meta had like a lot of downside. Why don't I have this here? Where is it? That was on Monday that it dropped. Would you at least get out at the bottom of yesterday? Upstart popping, irrelevant. It's just running with the market. What strikes for CCs did you do on GME? 1850, 19, none of your business. Run same like FSLR? No. No, I'm not roaring kitty. We don't look anything alike at all. Yeah, I know it's Meta's dumping today. They're getting hit with all kinds of FTC shit. Can you buy a pizza and eat it so I can live vicariously? I don't really want to order a pizza right now.
Hold on 1 second. What the fuck? All right. Would have been a 30K play and a 30K port. Ah. I mean, if you made a profit, then I mean, who cares, right? It looked like it was going to chop in the upper range. There's no way you could have known that the FTC was going to publish a bunch of shit today, right? Gherk's risk tolerance on CCs is not going to be the same as yours. Decide on your own strikes and dates. Do you have the money to buy them all back? Do you have a low cost basis? Do you wear a VWAP hat? Yeah, I mean, it's really not good to ghost my covered calls. I have a lot more flexibility in them, and I can sell a lot more of them. I can sell more of them to buy other ones back. I can roll them. I mean, it's best to manage your strikes and decisions for your covered calls on your own. Real time with Mayor, like show only with trader, analysts, and economists. Can you help me understand why VIX is slowly dropping while SPX options IV is going up? I thought these were correlated. Well, yeah, VIX 1 day. This isn't the VIX 1 day. They should have dumped after earnings last week. I mean, yeah, they should have. But so should Nvidia, right? I ordered pizza, but lost my coupon positioning. Now I'm out $45 for an extra large cheese. Can you help manage my DoorDash account? No, I'm not going to stream Dune Part 2. I expected more fear in the market with the Kremlin's alleged drone attack. Hmm. Alleged real hard? Who did the Kremlin attack? No, they got attacked, allegedly? Why would that make the market go down? Ukraine allegedly tried to assassinate Putin with a drone attack? That sounds like a false flag operation. Thanks for the $3, Walking. Keep it up, Fluffy. You're doing great. See how many more of those you can squeeze out of him. I only have CSPs currently, but I do give handies. It's a great way to generate passive income. What's up, Bob Lewis, Brigadier Shell? No worries, man. Good to see you. How you been? Besides busy with work. He's mad because you didn't read the one before that. I timed him out for saying Ko-Fi.
I mean, you could just time him out for saying anything. The market hasn't crashed yet. Good to see you. Watching the recaps and reading the updates. It's comical how many people get greedy and make no money. I appreciate you. Thanks, Bob. Well, hopefully you get some more free time soon. Not reading the Ko-Fi out loud and just thanking him for $3 made me grin exhale quickly out of my nose. I'm glad to see you smiling today, Rusty. It's such a change from the usual crying that you're doing. Or you're also crying still. Fluffy for Minister of Defense. He'd probably be great at it, actually. He's really on top of shit like that. Speaking of not reading, have you read either of my recommendations yet? Oh, you're talking to someone else. You light up my life for brief but wonderful moments in time. Perfect. Do you like Mesere Me Deuce by Allegri? I think it's rather nice to listen to. I feel like I'm familiar with it, but I don't remember it very well. I'll have to listen to it later. Mixed down today? LOL. Well, it went down for a little bit today while we were doing pumpies. Never underestimate the amount of puts they're willing to sell, JFresh. Brief but wonderful. The girlfriend tells me the same thing. Sounds like you're doing things right. 4 scrambled eggs, 3 turkey sausage links, 1 cup of oatmeal, 1 handful of blueberries, 1 handful of strawberries. That's my breakfast every day. Do you mix those together? Because that's fucking disgusting. It's the one Mozart allegedly remembered from the Vatican and wrote down. Okay. Hmm. How realistic is the probability of Apple missing its earnings? Okay, here, let's rephrase this. Um, you mean what are the chances they miss the already extremely low analyst expectations? It's possible. I'd say there's a decent chance. What would a bear case for Apple look like? They still haven't produced any meaningful revenue streams, and their cash flows continue to grind down. That and the moving of their supply chain over to India is costing them a lot of money and delaying production. Webull shows SPX mini futures data? No, just SPX, not E-minis. Mozart is dead, dude. Yeah, we know that. Can you take a look at QRTEA? They have earnings on Friday morning. I know a QVC business that says they've been really working on a turnaround plan and are hopeful for Friday's results. I own some. That's one of Burry's picks. 1 second. I'll be right back. All right. 10 minutes? Sorry, I had to go deal with something. If you bought BBBYRQ at open today, you'd be up over 100%. Yeah, and if you bought it 2 days ago, you'd be down. What the fuck is the point of a comment like that? If you bought it 3 months ago, you would have lost your life savings. Wait, what's going on? Someone's running around Atlanta shooting people? Can we just take away everyone's guns? I mean, everyone's. Tyler Soto's there? Oh shit, get the fuck out of there, man. Fat as shit, rich off puts, GameStop surges, banks fall in ruts, Nvidia shines, a bullish boon, a new era dawns, small gains now immune. Love my Pigler, you and me, stocks go up, we're wild and free. Thank you so much, Bob Lewis. Beautifully put. Yeah, no, just lock shit down like an absolute police state. Everyone loses all their guns. Yeah, and then everyone can have airsoft guns instead. What if I need to shoot someone? Nope. Because you as an individual and your gun ownership are irrelevant. It's about the greater good. We live in a society. You might be a responsible individual, right? You keep your guns locked up in a safe, with not only a lock on the gun, but a lock on the safe to ensure that if anyone breaks into your house, you're ready to get them. But that doesn't mean that other people aren't crazy. I love it when all the fucking gun nuts come out and they're like, stick to stocks, man. I know all about carrying armaments. Fuck you. It'll be easier to identify the outlaws. They'll be the ones with the guns, right? Did you hear about, wasn't there that like one guy who was in like an active shooter situation and he pulled his gun and then the cop shot both of them? That worked out great for him. What do you need a gun for? Seriously. God damn it, Fluffy, stop timing out the gun nuts. I can't do. I can't talk to them if they're timed out. It's a weird thing. We have no guns in Europe, and we almost have no mass shootings. It's crazy, right? You're not gonna defend against someone actively shooting you. You're at a fucking Walmart and some guy comes in with an AR-15 and just blasts you. It doesn't matter if you're packing heat or not. You're already dead. You're not like a fucking like spec ops soldier. Like you're not gonna have like situational fucking awareness when you're picking out your almond milk. Girk, someone broke into my house once while my wife used the gravy plunger on me, and he quickly turned around. See, that's good home defense, Kendro. Well done. Gun nuts drink whole milk. I played Call of Duty. I know what to do. Trust me. Yeah, that's not the same. Here's the lizard people running this god market algo. May they move the algo towards my max profitability. Stick to the gun talk, man. Let the lizards handle the market. Maybe I send the lizards a Ko-Fi instead of you next time. Okay. It's like all these. What are you guys doing? Just like sitting around waiting. You're like, I can't wait until I'm involved in an active shooting situation. I have a concealed carry license. Get fucked. I don't need a gun. I studied Krav Maga. My whole body has a weapon. Nice, Chaku. A mass who gives a shit what they think? That's the problem. Is just take them. They're gonna be like, my guns. You can't take my guns. And they're gonna like hole up in their houses and try to like fight back against the cops. You just shoot them and move on with the day, and then take their guns. People are far too stupid to have that much decision making power. What freedoms? There's no freedom. Even the National Guard has fucking tanks. They have Humvees with 50 caliber machine guns mounted on top. You're not fighting back against them. You're not the fucking Taliban. I've shot guns. They're fun as fuck. I get it. It's like having an extra dick. But sometimes you have to put that away. Close combat gun specialist. Thank you, Boof. It's almost Fed time. I have more important things going on than arguing with the gun people about how the active shooter situation is bullish. Is Tyler still alive? Oh, it's 2 o'clock. Do you know where your puts and calls are? All right. U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remain uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment inflation at the rate of 2% over the longer run. In the support of these goals, the committee decided to raise the target range for the federal funds rate to 5 to 5.14%. Ooh. In determining the extent to which additional policy firming may be appropriate to return to inflation of 2% over time. In addition, the committee will continue to reduce its holdings, blah, blah, blah. More 2% objectives. All right. Rate paid on reserve balances raised to 5.15. Repo up. Yeah, so 0.25 rate increase. Fun stuff. Oh, I should have sold my call. Hmm. Hold on 1 second. Okay. I'm just trying to see what's going on with positioning. Looks like calls are selling off, puts are building up. But I don't know if that's just due to the volatility. Out of the money calls are selling off. Might get another upside pump. There's still a lot of calls locked to the upside. Not a lot of them got out on that first pump. Reed's like leaving open for more hikes. I mean, nothing about a pause. Fed's fund rate highest since 2007. 4,200. Here we come. Bank jumped off a cliff that it built for itself. Premiums aren't as high as they could be. The premiums are a lot higher if VIX hits like 25 or 30. I don't know. There's still a lot of trapped calls. We may see another upside move. I don't think it's out of the question. I'm trying to look at the longer term trend here. It's just the initial reaction. There's still going to be more reaction during his testimony. People are still just buying calls and puts. It's hard to say. We're just below the gamma flip point here. So if we're going to bounce back, it'll be now. We got 24 minutes. Building clear, I'm back. Still in the loose, apparently. Instructed not to leave for 2 hours. Whole street locked down. Jesus Christ, this has been a day. Fuck, man. I'm sorry to hear that. I'm glad to hear you're okay, though. With regards to mass shootings in the US, there's a shocking statistic that over 93% of them, the shooter is either on antidepressants or within the withdrawal window of antidepressants. Okay. So instead of banning guns, you want to ban antidepressants? Now that we know it's 25 BPS, do you feel more secure with June puts? I mean, I think we already knew it was going to be 25 BPS. We need to see what guidance looks like. Guidance is far more important from this rate decision than anything else. They raised the federal funds rate. Hey man, I've got 14.21 available to trade today. Puts and calls are expensive, so I think I'm just gonna wait. Okay. Another shocking statistic, 100% of them had guns. Yeah. Well, I don't know the solution, but the USA is one of the few countries in the world that allows pharmaceuticals to be advertised. It's one of the few countries in the world that lets regular people buy guns. The gun is the issue in the shooting, not the fucking antidepressant. You can't shoot someone with a fucking antidepressant. They're just gonna come into like a school or a shopping mall and fucking fling pills at people. Guys, I'm really sad today. No. Knife attacks are much better. You can just run away from someone with a knife. If everyone runs in different directions, you can't chase them all. There's a reason we don't send our soldiers into battle packed full of knives. They get one. If he's a professional knife thrower, then maybe. But, you know, that a lot of things really need to align for that to happen. I've taken enough self-defense training to know that you don't fight somebody who's got a fucking knife. Because you will always get stabbed. Have you never heard of a slingshot? My way out of the money put on Nvidia popped 20,000% right at 2 p.m. Did you sell it? Did you sell it for 20,000% more? Guns aren't the issue, it's the bullets. Just take away all the bullets? That works. We don't have a right to bullets, right? We just have a right to bear arms. Nice solution, crypto. Why doesn't the government just take away all the bullets? Walken only has comments on this topic. The winner of a knife fight dies in an ambulance, yeah. I've heard the solution before. Don't take away the bullets. Just tax them outrageously, like $5,000 a bullet. But then you have to crack down on the bullet black market. What if we just do mandatory minimum sentencing for bullet ownership like we did with crack? Like if you own a bullet, 20 years. No questions, no parole. Are you being serious? How's a bullet worse than, like, better than crack? I'm well aware that the war on drugs failed. Archie Ghost tried that? Bullet swaps? How does mass 100% gun confiscation work logistically? You take the police, you have them enter people's homes, take all their guns, and leave, and they go house by house until all the guns are gone. Then use the law to socially disincentivize any future ownership of guns by raising the sentencing. Civil War? What a fucking joke. There's no civil war. See, that's the problem. Is a lot of these people think that they have some, by having a gun, they can protect themselves against the government. They have predator drones. They'll blow up your whole fucking house. It is fascist. But let's just live that reality, right? Like why pretend like it's anything else? Some kid with an Xbox controller. Legalize predator drones. Yeah, then it's fair. Because a well-armed populace has always resisted the US military, only because they weren't trying very hard. The police don't swear an oath to the Constitution. I said police, not the military. If you revolt, then the military can do whatever they want. You're no longer protected by the Constitution. Are they pausing future rates? They did not say that. They said that they will maintain they will continue to monitor incoming information and assess implications for monetary policy and determining the extent to which policy firming may be appropriate to return inflation to 2% over time. Please discuss the ramifications of the federal fund increases. I mean, rates up. Liquidity issues are just going to compound, right? One of my best friends helped design the Iron Dome in Israel with Northrop. Yeah, good luck against the government. If government take guns, bad guys know half them. Problem solved. Are you having a stroke? Have someone put like a metal rod in your mouth so you don't bite your tongue off. No, all of the call and put positioning is stabilized again, and we're waiting for JPOW to talk. Metal? Isn't it a wallet or leather? No, metal'd be better. Then he'll talk less. Most of the government and military and police are against taking guns. Most have publicly stated they would never enforce such laws. So replace them. Believe me, they'll enforce the law if their pension's at risk. What level of membership do I need to talk about SPX groups on the Discord? Welcome back, Dr. K. Dillionaire? But I feel like you know that already. Why not just ban crazy people? Too unpredictable. That sounds like tyranny, don't you think? What do you think? What system do you think we currently live under? Seriously. Do you think that our government is not already tyrannical? What fucking delusional world are you people living in that you think you have, like, freedom because you can shop at Costco? If you staged any kind of coup or formed a militia, you would get gunned down in the street so fucking fast and nobody would bat an eye. That's the reality of it. Look at Waco. They're not real militias. They don't pose a threat. What's up, Dr. K? You were censored. You stop talking about gun laws, drug laws, politics at all. Like a hot chick on Twitch having a spy just chatting. So fucking lame, but I can't stop watching. I I know, I'm awesome. I recommend the podcast QAnon Anonymous. People LARPing high-speed, low-drag operators and their plate carriers and tricked out tactical gear are laughable. It's a fucking joke. Oh, I update. Seems like call buyers don't have much gas. Actually, nothing's really changed. There was a bunch of movement right as the minutes dropped, and then everything's just back to being straddled again. Yeah, I know they're banning gas stoves. Mine's grandfathered in right now. They can pry it from my cold dead fingers. Or, alternatively, they could replace it with one of those cool induction stoves. I'd be all about that. I want a sous vide on my burner. Two mods on vacation and an FOMC day. And Gork starts a gun chat. Please buy mods pizza. Thanks, Brett. You should get a gun so they can defend yourself if they're coming for the stoves. I have a lock on my door. $25 a month to be a dill? What the fuck? You need to wear more bikinis to deserve that. No, I don't. I should charge more, but I don't. The only way to stop a bad gas stove is with a good gas stove. I should carry my gas stove with me everywhere so nobody can take it from me. Hmm. Yep, I'm gonna close this call. Nice. You sound like a fucking 5-year-old on the playground walking. Like, your mom's ugly. Why don't you just make like fat mom jokes? What's your valid fucking argument for why you deserve a gun? Everyone in this Discord knows you're fucking crazy as shit. You're the last person in this country that should own a firearm. Because you're a veteran? Should have taken advantage of that GI Bill and gotten an education instead. Walking as Matt Gaetz, I've been telling you? That makes sense. Discord civil war over guns. They're revolting. Oh no. As a veteran, I can say that a lot of us are messed up and don't need guns, even though we think we do. That's fair. Unlike the stream, so I could re-like it again for the gun chat. Thanks, Meatwad. Alright, Gurk. We know you're only about trading. Just how many puts do you have on Smith & Wesson right now? None. I love you, bro. Feel a major sense of gratitude for you. You were going to divide this chat into degeneracy with this? At a time we should be focusing on incoming volatility. Let it go? No. Where are the trapped calls? 4150. I've had this conversation like 50 times with this Discord and this chat. I'm not going to divide anything. Everyone here is well aware of my viewpoints. If they're not, and they don't like them, they can go fuck themselves. Because of my freedoms. I own 3 guns. I shoot one 4 or 5 times a year. Depends if I harvest 1 or 2 deer. Alright. I mean, you could use a crossbow, though, and make it more challenging. Giant double-headed dildos is the only weapon I need in life. It's true. As someone who got hit with one of those once, it's very painful. I was at a party. Not one of yours. Well, because as much as those people hate the things I'm saying, they will defend to the death my right to say them, right? Right, guys? Come on, gun people. That's what I thought. Well, I'm rich. Of course I don't want poor people having guns. It's the one thing that the rich people never get right. Because they want to, some of the rich people want guns. Here's something you never see. Rich people doing mass shootings. Hold on, I have to pull up JPOW. Oh, here he comes. Oh, he looks pissed. He looks really pissed. Look at that furrow.
Good afternoon. Before discussing today's meeting, let me comment briefly on recent developments in the banking sector.
I do remember that time I signed J-Pow's
Conditions
ear.
in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%.
Was that the buy
Inflation has
signal?
moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic
Fed's going
and financial
dark,
developments.
boys.
We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation at 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants
What's
can have
bullish
different
here?
perspectives.
Calls? There's
So
calls. That's what's
broadly,
bullish.
The forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Rachel. Thank you, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters for starters, and they're for Congress and the administration for the elected
fluctuating
parts of
back
the
and
government
forth.
to deal with, and
Zero GT is
they're
calls
really
bot on the pump,
consigned to them.
puts bot on the dump.
From our standpoint, I would just say this:
Nothing
it's essential
positionally
that,
is
that the
changing
debt ceiling be
significantly
raised
right
in a
now.
timely way, so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Oh, thank you. Yeah, Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank which talked about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about that I recall anyway about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Go to Victoria.
That guy bought 4,000p for today.
I wanted to ask you, obviously with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large size banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really
futures
don't have a comment on
pretty stagnant
on that
at
process.
41.50.
As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system.
Yeah, treasuries are moving up.
Bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
No, rates aren't pausing. No pause.
Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. When we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving a sufficiently restrictive stance. But I think conceptually, though, we think that interest rates, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement.
If I get timed out again, I'm going to join
factors.
the deck channel.
That's the
I don't
way
know
we're
why
gonna be thinking
Fluffy's
about it.
timing you out, but I can't undo it when
That's
he
really
does
all
it.
we can do. As I say, it does complicate. We have, a
And
broad
no, you're
understanding
not.
of monetary policy. Credit tightening is a different
No one
thing.
else would
There's
understand
a
your
lot of
kinks
literature
like I
on
do,
that, but
Kendra.
translating it into into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic.
I like the
projections
card
from
he's
March
playing.
meeting
We discussed
showed
this.
that at that point in time, that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's we're just going to have to. Before we really declare that, I think we're going to have to see data accumulating and make that, as I mentioned, it's an ongoing assessment.
And a follow-up on credit, if I could you give us a sense of what the SLUICE survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLUICE on May 8th, in line with our usual time frame. And I would just say that the SLUICE is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Go to Nick.
Nick Tamaros of the Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves. Why did the committee feel it was necessary to keep moving?
Well, the reason is that again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And that's what we're trying to do with our tool. I think slowing down was the right move. I think
That's the way to put it, J-Pow.
See more data.
Talk more about your
tool
tool and how you're going to use it.
So we really we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't with economic data. You can't. You've seen take inflation from it. Look back.
Just
We've
say
seen
stagflation. Just
come
say
down,
it.
move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that. That a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, you can calculate them many different ways, but One way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what most people would, many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Thank you, Edward.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
God damn it, Fluffy.
Would be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're gonna need to stay at this for a while.
How does the other side of the mandate?
Yeah, say that again.
Once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
So far.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast.
You'll be back,
possibly
Kendra.
Also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems that to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand.
The gig economy gives the Fed its regards.
Wages have been moving down. Wage increases have been moving down, and that's a good sign. down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope.
How are
will be
SPX
a
calls
mild
and puts
recession.
looking? The same as they were an hour ago?
Wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal, and then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So, speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
I mean, the bulls aren't hearing what they want to hear, right?
You have an imbalance between supply and demand.
I'll go into it more when he's done talking.
Supply.
But
and we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So I think as goods pipelines have gotten, back to normal, so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition, where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, and it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward, is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And so we can begin to assess how that fits in with monetary policy. That'll be an important thing. We'll be looking at everything. It's, again, I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet. And now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so we on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services, it really hasn't moved much, and it's quite stable. And so we think we'll have to. Demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney?
Courtney Brown from Axios. I'm curious how you view the role of the overnight reverse repo facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing, we don't think now. It hasn't actually been growing. It moved up, it moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now, what happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan Banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah Ewald-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's. I don't really think we should be. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just shouldn't be a thing. And again, I would just say we don't. No one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Scott.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the regulatory or the supervisory lapses at Silicon Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view? And what would it take to get the
God
stronger
damn it,
oversight
Fluffy.
that you and he said in your release would be necessary?
You don't have to time out everyone that calls JPOW cute.
I didn't take part
If
in
they're being
creating the
overtly
report or doing the
sexist,
work, but
fine.
I have read
but
it, of
like,
course, and
if they're just like someone's
I find it
cute,
persuasive.
you don't need to time them out.
I mean, I would say it this way. A very large.
That's not
a
really
large bank, not a very large
inappropriate.
bank,
I mean,
a
it's
large bank
out of context for
failed
the channel.
quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system.
I mean, it is kind of funny.
I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that is, it may just have been technology evolving, we have to keep up with all that, but some of it may be our policies and supervisory and regulatory, whatever. What our job is now is identify those things and implement them. And that's kind of the only thing I care about is, and I feel like I am accountable for doing everything I can to make sure that that happens.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
So, I guess I would say it this way. There were three large banks, really, from the very beginning, that were at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved, and all the depositors have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period of, is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, with what you saw in the beige book, and you will see in the sluice is small and medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Okay, Greg.
Thank you, Fed Chairman. Greg Robb from Market Watch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations, and I do feel that I'm personally accountable to do what I can to foster
so if you can't time me out here, I want to take these insanely cute reporters out back behind the Wendy's dumpster and bend every single one of them over a barrel of Baconator grease.
Is the statutory role, which is
Are you
quite
talking
unusual.
about even this
The Vice
guy?
Chair,
or mostly this guy? The guy who's talking right now?
Develop.
He looks like a
policy
walrus.
Recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as vice chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that person to have political accountability for developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel, my input privately, and that's, I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has
but probably
deferred
not for
on that
long,
person,
right?
Including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires. And, you know, but it isn't, I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on and why, and you know, that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors, and really in supervision has sole authority over supervision.
Just wondered if you had any regrets, or was there anything that, you know, decisions that maybe you regret now in light of what's happened?
I've had a few. Sure. I mean, you know, who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my great mentors used to always say, control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Oh, Fluffy, that's a low blow. You can't time the man out and then tell him he's cute.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered?
Man who calls streaming host ruggedly handsome every day gets timed out thrice for calling J-Pow cute. More news at 4 o'clock.
So support.
I mean,
for the
I was
25 basis
jealous,
point
but
rate increase
Fluffy
was
handled
very
it
strong
for me.
across the board.
So.
I would say there are a number of people, and you know, you'll see this in the minutes. I don't want to try to do the head count in real time, but people did talk about pausing, but not so much at this meeting. You know, that I mean, there's a sense that we're much closer to the end of this than to the beginning. That, you know, as I mentioned, if you add up all the tightening that's going on through various channels, we feel like we're getting close, or maybe
Apple
even there
before
but
earnings.
Again, that's going to be an ongoing assessment.
The IV's going to crush.
We're going to be looking at those factors that we listed and to determine whether there's more to do.
I'm curious too how to interpret that and the changes.
A little
to the
easier to
statement.
make money on the
Is
straddle
bar
than the
higher
strangle,
now to
but
raise
still
rates at the
not
next meeting,
super
or
easy.
Would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say. I just think I think we've moved a long way fairly quickly, and I think we.
I think I'm learning. I did the opposite of what I usually do and use zero DTE profits to buy stocks. Oh shit! Oh my God, it's working.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
Well, I just would start with something that's changed, really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history. And that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that, that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that then that we're going to revisit. It's pretty clear to me anyway. It's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have specific concentrations in certain parts of the economy?
Yeah, that's what Vice Chair Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.
All right. Well, that was an interesting approach, but it's, one we did discuss. The call interest is falling off of the chain. There are no rate increases. There is no pause. The Bulls didn't get to hear anything that they wanted to hear, right? Unfortunately for them. But at the same time, you know, they did their best to not encourage too much fear. But what they are doing is they are pulling back their narrative, right? In a way that may not be so obviously apparent just yet, but it will become more apparent over time. They're reducing their self-imposed obligation to communicate their intention. And what that does is it breeds uncertainty, which is a word you heard him use several times. And that is because there are, factors that we've noted affecting the economy that require, they probably require a firmer hand from the Fed in the future, and a firmer hand than they're willing to disclose currently, right? Like we've discussed the GDP data appearing to be stagflationary. Obviously, the unemployment data does not yet align with that, but it will. Given enough time of persistently high rates, eventually unemployment will go up. It's an inevitable outcome, right? Although it's remained resilient, it's losing ground, right? And when you have the trifecta of negative growth, increased unemployment, and persistent inflation, you have stagflation. And I didn't think that the Fed would move forward on a decision based off of one of the 3 GDP reports that come out during this quarter. But in a way, they have, right? By breeding that uncertainty, that it's no longer predictable what the Fed is going to do at the next meeting. The next meeting is now completely open-ended. It's not constrained by a terminal rate limit. It is simply constrained by the data that comes out over the next 4 weeks. So the bull side just became significantly riskier, and the bear side became a little riskier. And we're going to probably see a month of a very much more volatile and data-driven market. You know how the data hasn't mattered a lot because we knew the Fed narrative, right? So we've been getting all this data, but no one gave a shit because we knew what the Fed was going to do regardless. Like, I mean, it's almost been a certainty that the Fed was going to do 0.25 at this meeting this entire time. Now the data matters again. So CPI, PPI, because now every bit of that data we know is going to influence future Fed decision making, right? We don't know how though, and that's where the uncertainty comes. Oh, we're not done with banking stress. He just added another layer of stress to the banks. Banking as a whole, as the Fed considers it, is safe. Individual banks that are part of that system, not at all. If banks are addressing their liquidity issues and getting out in front of it, fine. If they're unable to, then it's a problem. We don't have a new range yet because we don't have enough long-term. I mean, most long-term positioning isn't, piling in right before the Fed meeting, right? It's going to be decided over time after the Fed meeting. Most of the, as we've already seen today, most of the positioning today is just flat, right? So, you get the spikes. We got a couple spikes up to like 41.40, 41.45. You cut your calls, you get some spikes down, 41.10. You cut your puts, you make a bunch of money. Because, that's just them exiting that position. They can do whatever they want at the next meeting based on their narrative today.
I mean, today we already moved to 5 to 5.25. So theoretically, we're above the terminal rate. The terminal rate in the March meeting was pulled back to 5.15. I'm out of the straddle and the strangle right now. I grabbed some out of the money puts for fun. See if it tanks into the end of the day. That's about it. And generally speaking, the end of the Fed day is usually pretty flat within the range we've already traded. I doubt we get a hard sell-off. We could, but I doubt we do, and we won't probably see a lot of movement till overnight into tomorrow. Because don't forget, the futures positioning is still going to reposition accordingly. So rates are currently already at the raised limit from this meeting. Yes. Well, rates were raised beyond the limit. Technically, well, the upper end of the federal funds rate is currently beyond the limit. Made 120 on a 0 DTE. Yeah, they're not generally Fed funds. Like, we've had a few that were really profitable, but generally speaking, you know, you pick up like 30% on either side of the strangle. You might get a little more off of the straddle, but yeah, it's not like the greatest. There've been a few where, like, you know, both sides, you know, we had big like 150 basis point moves. But it's been a while. Well, I think the last one we had that was like November. Or was it December? Or December. December might have been the last one that moved just really hard. Kisses lips, touches hips to check for weapon. Oh, Jesus Christ. Well, that leaves the future of Upstart moderately uncertain until next month. Although that could mean that Upstart's now more exposed to its own conditions, right? And less influenced by the macro for the next month. So, you know, Upstart still very illiquid. Although there was some selling of it over the last few days, which brought back a little liquidity. I'd imagine that'll dry up quickly as shorts persist. Yeah, no problem. I'm gonna... Do I have everything in place now? Okay. I have no interest in buying MULN, even if they reverse split. Why would I buy it before the reverse split? Wouldn't you buy it after? If there's notification of a reverse split, though, the shorts are already going to be appropriately hedged. I got out with 1,500 profit on 0 DTE. Nice. Yeah, I mean, there's money to be made on it. This one isn't as crazy as some of the prior ones have been. We've definitely had some that were, you know, really, really big moves and super, super volatile decisions. This one's kind of just a slow disappointment on the bull side. We're getting a little bit of put accumulation, 4,100, 4095, 4090, 4080, 4085. So put buyers driving the price down, taking advantage of that that sweet negative gamma, right? And the market wasn't going to crash today. Regardless of what he said, the market wasn't going to crash today at all.
If he'd gone with a stronger rate increase, a surprise 0.5, 0.75, and had a more hawkish tone, although I think his tone was sufficiently hawkish to further their agenda. We might have seen a crash by like Monday or something, but not immediately. I mean, if he'd said recession, we'd be at like 40, 50. Probably. Especially if he'd said recession instead of uncertainty. Jobby Job pulled me into a call 30 minutes before JPass, so I didn't get to open a straddle. Opened a 4,100, 4,000 June spread that's up 20%. Can't win them all, but I'll take what I could get. Nice. I think we're seeing a pretty decent amount of, there's a lot of puts coming in at 40.90. 40.85, 80, 75 all seem pretty strong. We got about 30 minutes till close, so if the bears really pump the negative gamma here, we could see some pretty serious downside, I think. It looks like they're at least trying to. Mild recession, same like recession for white people. Yeah. I don't know what that means. Recession for everybody, worse for poor people. My first big straddle ever on SPY. Proud owner of a small account that today became a little less small. Managed both legs green, plus some scalping here and there afterwards. Thank you so much, Girk. Hashtag 500 more. Nice, Stock Solona. Congratulations, man. Well done. What conclusion of JPA's comments and questions missed it? TLDR. What was the conclusion of his comments and questions? Oh, I mean, I kind of discuss it right after the video ends if you want to run back over it. Basically, Fed's doing an uncertainty thing, and they're pulling back their narrative, and they're going to be a little less forward with their guidance, right? Thanks, smells like up, Doug. Let's talk about U.S. banks' troubles. Next default, their risk is largely in the MBS sector. So they may be the first to fall when commercial real estate and, residential real estate starts to see any kind of significant decline. But I don't think they're going to fall like right away. I think PacWest is probably like a little more duration risk exposed. So they might be sooner than U.S. Bank. U.S. Bank's quite big. I think either way we'll probably see some warning signs. Like we did with FRC. There were a lot of warning signs with FRC. Does that mean that JPEL will have to come out super hawkish at the next rate decision? I mean, if like, well, we get unemployment later this week, we get CPI, PPI next week. If unemployment is not up, right? Or if, well, actually both. If unemployment is up, here's a situation that would be interesting. Unemployment is up, maybe even substantially. Two basis points, right? Or well, 20. So unemployment what would that be? 3.7. And then inflation's hotter. I mean, we already have core surpassing, right? Which means that more volatile inflation measures are likely to pick up in the future. That's the definition of stagflation. I don't know how long they could dodge that for. Well, there's zoning laws they have to deal with trying to turn those commercial properties into residential ones. That's a solution, though. It's like averaging down, right? Sure, you crush rent prices in an area when you create more housing, but you also, have more housed people. Made $1,200 and some zero DTs along with adding to some green longer dated puts. After last time you advised not to panic sell early, and I made it almost all the way through the Q&A this time. I should have held longer, but still green. Well done. I mean, I took profits on the straddle and the strangle back here. So, I was mostly out of both by the two like early peaks. And then, I closed out the short side over those three. So, I mean, it's generally the best way to manage them. It sucks though, because sometimes you have to hold that dead position, $20 out of the money, and then if it moves higher, your losses compound. But I sold both puts and calls at a profit. Perfect. And yeah. I mean, we'll get more into what the Fed narrative is going to mean as we see, repositioning occur here. The market has now dragged back to where it bounced on Tuesday. We're at the lower level. Negative gamma is obviously accruing. So we have negative momentum. Pretty substantial negative momentum, I would say, especially with the more significant sell-off in calls today. So I think we may now be entering a period where the downside persists. I don't want to say that too soon because we don't have a great idea of the longer term positioning now, but I think our expectations are going to come to fruition ultimately. There are some caveats. We have Apple earnings, which could stimulate some bullishness in the market, or may stagnate price action. So, yeah, I don't want to say anything too soon, but it does look good. Nvidia is a fortress for now. Thank you so much, NW. I appreciate it, man. Tesla falling off beautifully. I think we're well overdue for a decent correction, a good pull down in yields, a bump in treasury prices. Oil's getting pretty low, which is interesting today. I mean, good for puts. It's not looking particularly good for calls right now. Hold on, I'm just trying to see if we're gonna lose this. Yeah, I think we might lose this 4090 level. Lot of 0 GTE puts coming in 40, 85, 80, 75. Still have 19 minutes to go. So I think, well, I mean, I'm close to making money on this 0 DTE 4080 position. If they move substantially in the money, that'd be interesting. Copper not looking so hot today either. Okay. Noted. Gold is moving up. BTC is not, which is, that's interesting. Yeah, I don't know if Vana is the most important thing here, Dave. It's relevant, but I would say that the fat delta is far more relevant. That's no different than the upside here, right? Like, you know, as far as charm goes, right? And, you know, as long as they continue to buy 0 DTE puts, then they can offset the market maker sell-off. Are you gonna update your SPY chart? I don't know, maybe. Probably tomorrow. Well, I'll do it tonight. Do you have a PT for BTU CSPs? No? Not like a specific one. Is BTU doing something weird? It's dropping. Ooh. I mean, I might soon. If the market drops, BTU probably will as well. Express is a fortress. That's not doing a lot. Bear song? No. Do you think productivity and jobless data tomorrow will have a significant influence on direction? It'll have some influence. I don't expect any changes. I'm sure the Fed was already made aware of those reports today during the meeting. $40, 95 and 85 volume week compared to 40, 90, 80. '85's doing a little better than 80 right now. Actually. If we break through 40, 90, you'll see those ramp up. We're pretty close. I think momentum's still favoring us, so. Problem with these contracts is it gets so volatile in here. All right. BTU entering a buy zone again? It's getting very cheap. Yeah, I'm probably going to start purchasing it. All right, 90, 85, and 80 picking up again. The problem is the in the money puts that are selling off. Will VIX break 19? Probably not today. If you had to guess on futures decision overnight, would you say more than likely down? Debating with myself for holding 40, 80p One DTE overnight. I know it's risky. I mean, it's risky. Can you trade in the morning session or no? Do you expect any recovery of our previous trend of the upper 4100s? I mean, right now positioning does not look favorable for us to see, you know, above like 4120. And even that may largely be sold at this point. Oh. Oh well. I'm not gonna hold it into the last 8 minutes. We'll see if it nosedives now. Don't you think JPOW was too soft? No, I think it was fine. I mean, obviously I would have preferred he was a little more aggressive, but I think it's okay. Don't forget that they can raise rates again in a month. I'm going to continue 2 to 1 night straddle put heavy. Yeah, I'm probably going to enter it here in a minute. I might actually go like 40 90 4100 and strangle. Maybe with a slight bearish skew to it. Raising rates again in a month puts us 1 month further into stagflation. I mean, they did raise rates today. Oh, I have no idea. They're probably doing shit out in the hall again. It's not knocking, it's like hammering or something. Sorry for bothering you with another Apple earnings questions. How has been Apple's track record on forward guidance? If Apple beats earnings and there's bad guidance, market downsies, yeah. No one wants to hear bad guidance out of Apple right now. I mean, and I don't expect them to issue a lot of bad guidance, but I don't know how they support more positive guidance. The trend in Apple's earnings is not looking very hot. I don't know why they're always doing work on my building, but they never seem to accomplish anything. Money laundering? I've seen Ozark. Oh, maybe. Actually, that would make sense. I sold and bought back cover calls yesterday, and I sold some more this morning. Can I buy them back again today without incurring a violation? You should be able to. I don't know how that affects PDT. If it's a PDT question, but if it's a settled cash question, I don't think it would matter. As long as you're not free riding. Check your DMs. I've been a good boy. Re-queue to my beautiful, handsome, sexy husband. Thanks, Darth. I appreciate it. Apple hasn't provided guidance since 2020. They don't provide traditional guidance, but they do provide guidance, right? Because they talk about what they're doing, their plans, and their like incoming product lines, right? So they do. They just have big events for all their guidance. And the lack of big events means a lack of new revenue streams, which Apple desperately needs at this point. I don't think that the Goldman Sachs 4% interest rate banking is going to cut it for them. Ooh, nice. $20% increase my port today from the JPOW meeting. You're welcome. Congratulations, man. That's awesome. But they have the ultimate rent-seeking platform. They have an app for that. Check DM, please. Later. I'm not in the mood. No problem, Greek yogurt. Congratulations, dude. Data dog? What? Almost up to $90 now. Winning. I did not know that Chobani was going public. Are they going to try to usher in a bunch of IPOs for the next leg up in the market? Probably. They want to start dumping bags. That's not a good sign. No comment. Yeah. My 411p was forced liquidated due to risk of automatic exercise. So I lost $10 and missed out on all this downside. Call your broker and tell them not to do that. Or maybe you can't, because it's a settled cash thing. You brought this up yesterday, right? Maybe get things closer to the money so you can get out of them without running into that like settled cash risk. That might be a way to dodge it, at least in the near term, so you can build up some more capital. I've leaked transcript of Apple earnings, so yeah, iPhone isn't selling so good. But we put an AI thing in the iPhone 25 and increased the price to $5,000. People will totally buy it now. Yeah, they've got some issues currently. 1K port from earlier this month is now 12K. Thank you so much again for everything. You got it, Slot Machine. Congratulations, man. Data's monitoring software like big corps use, possibly the best around, but considered overpriced. Okay. I mean, CapEx reductions probably won't be good for them. Well, any expenditure reductions won't be good for them, actually. OpEx and CapEx will be bad for them. Harder to get new customers, and old customers will be spending less. Wait till Apple software as a service is probably gonna see some decline throughout the latter half of this year. How are treasury shorts feeling today? A little more pressured than they have been in a while. Scalp some small profits during the speech. Now I just need Jamie to drop a couple dollars by 519. I don't think you need to worry about that. Ding ding. The day is done. Well, so I think that the Fed's narrative is bearish enough to drive out any near-term speculation. And since the pump that's been going on for the last, like into the end of last week, beginning of this week is largely fizzled out, the downside is going to open up a lot more here. We had a lot of put buying encouraged by the cheaper put prices and the lower VIX. Volatility seems to be upcycling now. I think we'll see a more persistent short interest in the market. I don't know if we're going to drop rapidly. That might something like that might need a little bit more encouragement, but our direction is now negative, right? We have negative gamma. We're sufficiently in the negative gamma environment. We're starting to fall into the areas where put interest is significantly heavier. We have liquidity crunching with the Treasury General account filling and continued QT by the Fed. That doesn't seem to be stopping anytime soon. So, and the discount window's continuing to close. Actually, only a couple more weeks left of that. And there are plenty of put interest to the downside. So yeah, I think we're about due for a move down. I don't know how violent it's going to be. We're not really near SLD or anything like that. Obviously, data dependency is going to go up with the Fed being uncertain in their projections. So that means we're going to need to start monitoring data points a little more carefully day to day. Labor data and inflation data very specifically. I don't think manufacturing data is going to weigh too heavily on any big index movements, but inflation and labor data absolutely will. Persistent high inflation combined with high well, we don't have the unemployment part, so we're missing the trifecta of stagflation still. But unemployment is an inevitability at this point, and the inflation remains persistently too high, which JPAT noted multiple times. And that's the problem, is that inflation isn't dropping at a rate commensurate with the expected rise in unemployment, right? And so if we'd gotten inflation down and unemployment up a little, but right now they're moving together, right? Inflation's going up, core inflation is rising over headline, and unemployment is rising. 1 point on the last report, but it will probably pick up pace, right, as we move forward. And so both of those moving in tandem together is very bad. What are you making a calendar, NW? You're gonna make a calendar of all the words I use? $250 port now, $275. Nice, Lugs. Clawing it back. Overnight, many things can make SPX drop tomorrow. However, I can't think of much to make it gap up and open. It needs to be super significant, right? I mean, we could see, futures push to the upside to try to capture some of that lost call interest, but there wasn't a lot of call interest coming in for tomorrow anyway. So the positions up there might mostly be sold at this point. And I think we already saw a significant flight out of the call positions earlier today during the speech. But yeah, there can still be some price volatility within our current range. I just think that the overall direction is over, multiple days that we're going to take is going to be down. Intraday, yeah, there's going to be volatility. Anyway, thank you guys so much for tuning in. Happy 501st episode. Appreciate it. And I'll see you guys all bright and early tomorrow morning. Have a good night, guys. Later.